Go until the start of cash equity trading. I'm Tom McKenzie in London, and here are your top stories. Dollar doldrums, the greenback kicks off the week lower while Chinese shares jump. JGB yields pierce the BOJ ceiling again before Wednesday's crucial policy decision. Top EU and UK negotiators speak today to gauge whether a fix to the post-Brexit trading arrangements for Northern Ireland is within reach. Plus, we will kick off our week of high-profile live interviews out of the World Economic Forum in Davos with an exclusive conversation with the CEO of the Qatar Investment Authority. Let's take a look at the futures then. This Monday morning, US markets ended last week in the green, the highest level in about a month, and European equities have had their best start to the year on record, edging and adding about 6.5% to European equities. The question is, of course, as to whether that can continue. And the conversation certainly around the recession risks in Europe have become slightly less urgent in terms of some of those forecasts. The FTSE 100 currently range-bound. On the European question, the ECB now, on a Bloomberg survey, expected to hike to 3.25% by middle of this year before starting to cut. That is the expectation from the Bloomberg survey of economists, distinctly out of sync with what we've been hearing from ECB officials themselves. Over in France, the CAC currently up 0.2%. The FTSE 100 now up about 0.1%, and over in Spain, gains of 18 points. So building on the upside that has been built across European equities year to date. Let's switch it over and see how things are playing out, of course. We look ahead to the US. The session's going to be closed today for a national holiday, Martin Luther King holiday. Futures are pointing lower just by about 0.1%. Again, Friday ending the session in the green, with expectations that maybe the Fed steps it down to 25 basis points at that February the 1st meeting from the Federal Reserve. The yen is firmly in focus for us. Of course, we have that Wednesday meeting from the BOJ. Strength coming through at the highest levels now for the Japanese yen since May. And again, as we said in the headlines, that 10-year yield getting back above that threshold of 0.5% in terms of the yield curve control. Question marks as to whether or not the BOJ does, in fact, change that yield curve control, or in fact drop the policy altogether. 127 on yen. Iron ore futures are suppressed. They're currently down in terms of the pricing, down 4.5% on news that Chinese officials are scrutinizing some of the pricing action. Iron ore has surged in the last few weeks. Bitcoin back above 21,000. FOMO is back for the major cryptocurrency. Gains of 0.9%. And that rally continues for Bitcoin. Let's get over now to Bloomberg Managing MLive editor Mark Cudmore. Mark, you are looking at the US debt ceiling, and this is a political debate that is already causing tensions on Capitol Hill. Implications for that economy then?
Yes, Tom, good morning to you. This is a story which is going to probably run and run for the first few months of this year, but it's been very much in the news for two particular reasons in the last few days. One is US reports that Kevin McCarthy only got the speaker position because he agreed to bring debt ceiling debates to the brink, because there's the holdouts in the Republican Party are very much hardline on that issue. The other one is Janet Yellen kind of flagged warnings and said the Treasury would be enacting special measures as soon as this Thursday to ensure that the Treasury won't reach the debt ceiling until later on this year. But the fact is they're going to have to enact those special measures already. She is saying it's probably not until at least June, maybe until August. They won't have more clarity until they see tax income in April. But it's going to be a major issue this year. And I think that the lesson in the last 15 years is that ignore this debt ceiling debate. It's always a big issue, but ultimately the US would never be stupid enough to voluntarily default when it's just an arbitrary debt ceiling limit. I think that lesson might be a mistake this year, and I think they'll really push it to the line, and this is going to cause havoc in yields later on this year. Why do we care so much about the debt? Well, this is estimate debt payments, just the coupon payments to service US government debt looking back over the last 20 years. And you can see it's gone parabolic over the last year with the rise in yields. It's a rise in yields that packaged on the massive increase in debt because of the stimulus because during the pandemic. We now have estimated coupon payments for 2023 of $743 billion. As you see, that's been rising in a parabolic line. That's as of the end of December. $743 billion. That is more than 3% of US annual GDP is now going to coupon payments just to service its outstanding debt. Pretty impressive number, and that is a bad sign for the US economy, and I think it's going to be way on US Treasury later on this year, and probably way on the dollar a little bit as well.
Wow, more than 3% of GDP, and just as you say, on the coupon payments, and that is part of that argument from those Republicans on the need to constrain the debt levels in the US. Bloomberg MLive Managing Editor Mark Cudmore, thank you as ever for the context. Now, Goldman strategists say equity investors should learn from 2022 and prepare for a hard landing when positioning for risk. Meanwhile, former Treasury Secretary Larry Summers warned the US economy is not out of the woods yet.
One has to be careful of false dawns. And if you think about it, the good news was inflation running in the 6s, and that's still inconceivably high by the standards of 2 or 3 years ago. So I would stick with my view that a recession this year is more likely than not.
Well, we are joined now by Guy Foster, Chief Strategist at RBC Brewin Dolphin. Guy, good morning. Thank you for joining us in the studio this Monday. Let's kick off with the view then from Larry Summers and arguably the team at Goldman Sachs as well. Costin saying the EPS revisions are starting to point to a hard landing. Is a recession still the base case for you and the team at Brewin Dolphin when it comes to the US? Or are you starting to see a more nuanced picture now?
Thanks, Tom. Yeah, well, I think the picture is highly nuanced, to be completely honest. I mean, are we going to get a hard landing? Would say it's very likely that we'll get a hard landing. The timing's, of course, the real issue, and the expectation. Obviously, the big question is, do you get it during 2023? And I think you're going to get it either late 2023 or sometime in 2024. There's a lot of uncertainties that we just can't know at the moment. A big one is what happens to oil prices. You know, the impact of oil prices on gasoline and how that affects American consumers. And of course, oil itself is a very uncertain story because of the precise timing of the Chinese reopening. So it's certainly something that we expect to happen, but whether it happens this year or not is the real question.
Okay, so that's really interesting. You still take the view that there is going to be a hard landing in the US. It's the timing, 2023, end of 2023, maybe 2024. How is that being reflected in earnings? Are the revisions accurately reflecting that potential pressure then across the US economy?
No, not yet. I mean, I think you're not really in that sort of that phase of revisions looking out that far at the moment. So I think with the amount of uncertainty you've got, you're not going to get it coming through in guidance from companies, and so certainly stock analysts are not going to be able to incorporate that data into their estimates. So you'll always see this ahead of a recession or a meaningful economic slowdown. See, all the macro forecasters can see surveys and things like that, but analysts are obviously going to be very, very heavily skewed by the messages and the guidance that they're getting from companies. And actually, that was the better steer last year in terms of reassuring investors that actually, particularly the US consumer, remained in extremely robust shape.
Is that how you allocate then? How defensive do you want to be if that is the thesis, a hard landing in 2024? And I know you've got caveats around the time frame, but how are you allocating around that?
Yeah, so we're relatively defensive at the moment. I think the likelihood is that this year experiences probably a couple of rallies. You know, we've got to come into this year obviously seeing quite a good rally. So now's not a great time to be adding risk to portfolios, but I think you'll get those opportunities over the course of the year, and then obviously generally the market bottoms in a sustainable way well before the end of a recession. If it's a short recession, it can bottom before the beginning of a recession. So you certainly be looking to be more constructive on risk towards the end of this year.
And when it comes to the dollar linkages to this earnings story, we've got the Bloomberg dollar index down at about a 9-month low. And I know you take the view that the dollar hasn't necessarily peaked at these levels. That potentially there's maybe further downside, but you think there could be some turnaround for the dollar?
I think there'll be a rally in the dollar this year. I'm not sure whether I think it's unlikely to take out the peak that we saw last year. I mean, that was pretty exceptional.
What's the rationale for that rally in the dollar that you foresee, given that interest rates are expected to step down?
Well, it's moving with risk appetite, and so the recovery in risk appetite has been good for the dollar. If you start to see expectations of recession, regardless of what those might do for interest rates, it tends to be quite a good environment for the dollar. And when we talk about interest rates, there's obviously a few, I mean, not loads, but there's a few cuts already discounted, and I think that's a little bit premature. I think actually the Fed are being pretty reasonable with their language to tell people, you know, we're going to get to somewhere around 5, and then we're going to stay there. And I think probably most people, Larry Summers, you know, would think that that's not an unreasonable place not an unreasonable policy trajectory. Okay. So I don't think we want to get too obsessed about the rate cuts that are already discounted for this year. It's not very many. And the ones for 2024, 2025, which are the bigger ones, they're probably more reasonable.
Okay, so rates held at around the 5% level, held high for longer, and that's going to prove supportive at some point this year for the dollar again.
Yeah, I think so, yeah.
All right, Guy Foster staying with us. Thank you very much indeed. Chief Strategist at RBC Brewin Dolphin. We'll get more of Guy's calls on China and the BOJ as well, importantly, given that meeting from the Central Bank of Japan on Wednesday, the implications for their yield curve control policy. Now, the World Economic Forum's annual meeting is, of course, getting underway in Davos. Stay with us for comprehensive coverage. We are starting the week with these guests, including an exclusive interview with the CEO of Qatar Investment Authority. That is live later this hour. Do stay with us for that interview. And coming up, has the Bank of Japan opened up Pandora's box? Then investors are on high alert for another hawkish pivot. We will have the details. This is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
A weird floaty thing right now.
But look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Count Under the Close.
Welcome to Bloomberg Crypto.
This week, Bloomberg is live at the World Economic Forum annual meeting in Davos, Switzerland. As energy crises loom, wealth inequality intensifies, and global power dynamics dominate headlines. Trust Bloomberg for the fastest coverage and exclusive analysis from the world's top leaders and experts. Coverage begins this week, only on Bloomberg Television and Radio.
Welcome back to the Open. We are 13, almost 14 minutes into European trading day. Happy Monday. Gains of 0.3% across the European benchmark. Here in the UK, the FTSE 100 trading above 7,800, just adding 15 points. The US closed, of course, for a national holiday. European stocks, then, a record start to the year. And markets, at least economists surveyed by Bloomberg, expecting the ECB will hike rates to 3.25% before cutting them by the end of this year. Talking of central banks, let's focus on what's happening with Japan then. Japan's benchmark bond yield rose above the central bank ceiling for a second day as investors hedge against another hawkish move by the BOJ. Guy Foster, Chief Strategist, RBC Brewin Dolphin, is still with us. Guy, we had this bold call from Citigroup last week that the BOJ will drop their yield curve control policy this week at the meeting on Wednesday. We're braced for surprises. Markets are braced for surprises from the BOJ. How do you think they wrestle and get out of this conundrum, this straitjacket that they've essentially built themselves?
Well, Tom, I don't know is the short answer, but if I were making the decision, I think you would have to give real serious consideration to the idea of fully relaxing yield curve control. And I think it seems like that's something that they are planning to do. And I think that the path towards it has been pretty effective so far. You know, I mean, when yield curve control was first announced, exit strategy was, I think, one of the first things we all thought about all of that time ago, anticipating, yeah, okay, once it's clear that that's what you're doing, you're going to start to see speculative attacks, you're going to start to have to spend more money at a time when you're trying to spend less money. And so far, you know, there has been a bit of that, but it's been much more orderly than you might have feared. Expectations before they made the first relaxation were that maybe this is going to be something beyond April when the new governor comes in. That was so it was a surprise. It preempted speculative attacks in advance of that to do it on the 20th of December. And straight away after that, the consensus was again, oh, well, the next relaxation will be with the new governor. So, I mean, it would make quite a lot of sense to preempt that one more time.
And do you want a position around that? And if so, what are you shorting JGBs? You want to be going long the yen or looking at Japanese equities? How do you want to play that story?
Yeah, I think Japanese banks and insurance companies will be an attractive place to invest with the kind of asymmetry that these kind of policy moments give you in advance of the move, and whether it comes now, whether it comes in April, you know, I mean, even perhaps if it doesn't come, I think they're in quite a good position. So that seems like the most attractive way to play it.
Let's switch focus to the UK. Top assets that you're looking at in the UK as you try and get exposure to the story here. Do you want to be looking domestically? Is it about the gilt markets? What in the UK is looking attractive, if anything?
Well, I don't know if I really feel that they look attractive, but I think relative to other government bonds, gilts are certainly seem like the most attractive of the sovereign bond markets. They haven't got that same degree of inversion that you've got in the US. The UK consumer is, or the UK economy is very interest rate sensitive, unlike the US economy, which is very interest rate insensitive. In fact, the rate hikes in the US have actually given consumers more interest income than they've lost in interest expenditure. Whereas this year, we've got tax hikes, we've got mortgage refinancings, we've got a further rise in gas bills, utility bills, probably, unless we see still a fair amount more decline in the gas price. So there's a lot of headwinds for UK consumers. In the equity market, I think insurance looks quite attractive. You've still got quite a hard pricing environment. Inflation's coming down, so that the expenses associated with selling insurance are reduced. And that's not just a UK story. Again, I've mentioned Japan, but I think in the US, actually, we quite like some insurance brokerages. So that's a theme we've got really across the world.
Okay, Guy Foster, thank you very much indeed. Chief Strategist at RBC Brewin Dolphin. Opportunities there in insurance, whether it's in Japan, the US, or indeed in the UK. Maybe some opportunities around the gilt markets here in the UK as well. And now, coming up, America's biggest banks, well, they've kicked off their earnings season, of course. We round out how 2022 is looking for the lenders so far. This is Bloomberg.
The innovation agenda is going full speed on mitigation. That's where, you know, there's 100 companies, Breakthrough Energy's funded.
By mitigation, you mean mostly energy. You mean everything to do with energy. You mean generation of energy. You mean batteries. You mean transport. You mean all of the new, and there's some renewables that are already traditional, but more that need to come out. So that's the package that you're talking about mitigation? Yeah. Or are you also talking about agriculture as mitigation?
Yeah, so every area of emissions, you know, the world tends to focus on passenger cars and electricity. That's not a third of emissions. And so the focus on the easiest third, you know, now 4% of new cars are electric, you know, so that's the field that we're furthest along. About 4% of energy generation is wind and solar.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges next.
was going to keep rate World Cup. This is a 3.
As the economic picture does. The BOK is getting ready to make a decision.
Snow-covered Alps, private jets, and coveted white badges. The world's elite will descend on Davos for the World Economic Forum's first winter meeting since 2020. The themes on the official agenda are a bit of a mouthful, so let's break it down. Here are the top 3 things that'll dominate this year's agenda. Number 1, it's all about inflation. The post-COVID recovery crashed headfirst into surging CPI in 2022. Supply chains stretched to breaking point and prices soared, putting pressure on consumers. The Fed and central banks around the world responded with aggressive rate hikes, taking the possibility of a recession in their stride. But were they behind the curve? Number 2, a shifting geopolitical landscape. Oh, yeah. Russia's invasion of Ukraine forced many nations to choose sides and shore up energy supplies. Russia was absent from the forum's summer gathering in May and won't be there this year either. China-U.S. relations also hit a new low over Taiwan and human rights. China is looking to come back bigger than ever at its first gathering since the pandemic, but will they receive a warm welcome? Number 3, crypto and regulation. A late addition to our top 3 thanks to the implosion of Sam Bankman-Fried's FTX empire in November. His arrest and extradition to the U.S. has given regulators more ammunition in their drive to rein in the crypto industry. So are we already past peak crypto? Those themes aside, the big question may be more about the event itself. With criticism in recent years about its relevance, can this year's Davos produce anything more than talk?
Okay, that was a look at some of the things to watch out for at Davos this week. Let's check in on some of the movers then in the session so far, 23 minutes into your European trading day. One of the stories, of course, is around what's happening in crypto. You're back above 21,000 for Bitcoin. It's a rally of about 30% this month. So one of the UK-listed firms that has exposure to crypto is a blockchain mining company called Argo Blockchain. You can see it gaining 20% in the session today. Rio Tinto, a bit of a drag there in terms of the pricing, in terms of iron ore. It's taken a bit of a hit after a very strong rally. Chinese officials coming out saying they are scrutinizing some speculation within pricing on iron ore. So that's pressuring Rio Tinto, just down a little over 1%. And Sika, this is a Swiss construction materials company. It is selling some of its concrete assets to Ineos to win approval for its acquisition of the MBCC group over in Germany. Just getting 0.2% on the back of that news. Now, let's get back to the corporate earnings story, and particularly the banking sector. Year-end earnings for some of the biggest lenders in the US met less than enthusiastic receptions on Wall Street on Friday. Let's get into the details then with Catherine Griffiths, who's Bloomberg's city editor. Catherine, broadly speaking, is 2023 going to be a good year or a bad year for the banks?
So it's an incredibly difficult question to answer. I think perhaps more difficult than it almost ever has been in the last few years. And I think that's reflected in what investors thought on Friday. The shares of those banks that reported were down and then they were up and people couldn't get a grip on it. And the results were quite mixed. In many ways, the banks did really quite well. They had great net interest income because of rising interest rates. They had great trading income. But of course, unsurprisingly, they did terribly on investment banking deals. And then as the sort of warning red light, they increased their provisions for bad debts going into this year. But then as another complicating factor, it's actually now not really that certain that the US will see a recession, when it will see it, when it will happen, and how severe it will be.
So it's a complex picture and a lot of uncertainties. And that raises the question as to whether or not they're done when it comes to job cuts, because when you've seen a slew of cuts across the banking sector, are they done? Has the pain point been met?
I suspect we might see some more job cuts, but it's tricky for banks because, and they've done this many times in past cycles, they cut deep and severely, and then they have to build back up again. So they'll try to avoid that if they can, but I suppose there's the potential for some banks to try and sort of screw the price down on how much certain investment bankers think they're worth, potentially.
Okay, so maybe a little bit further pain in terms of employees across the banking sector, and question marks about their compensation as the picture looks a little bit more complex for the finance industry. Let's get Bloomberg's Catherine Griffiths. Thank you very much for the take on that. Of course, the earnings coming through on Friday for some of those big US lenders. We're going to be getting at the end of the month European banks, of course, reporting their earnings through February as well. Now, coming up, we're going to be kicking off our week of high-profile live interviews from the World Economic Forum in Davos with an exclusive conversation with Qatar Investment Authority's chief executives. Here's a little look at the markets, though. You're seeing gains across the European benchmark of 0.2%. The US is closed for a national holiday. Futures pointing lower on the S&P E-minis by 0.3%. Nasdaq futures lower by 0.4. When it comes to the currency markets, firmly focused on what's happening with the Japanese yen. Further strength, again, it's at levels we haven't seen since May for the Japanese yen, on speculation that the BOJ will have to, if not abandon, then again tweak its yield curve control. 128 on the yen. Stay with us. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. Dollar doldrums, the greenback kicks off the week lower, though it has turned around in just in the last few minutes. While Chinese shares jump, JGB yields pierce the BOJ ceiling again before Wednesday's policy decision. Top EU and UK negotiators speak today to gauge whether a fix to the post-Brexit trading arrangements for Northern Ireland is within reach. Plus, we will have extensive coverage, of course, of the World Economic Forum in Davos, and we're kicking off the week with an exclusive conversation with the CEO of Qatar Investment Authority. That important interview coming up in just the next few minutes. Let's check in on these markets then. The European benchmark currently up 0.2%, pairing some of the earlier strength, but continuing to build on what has been a record start to the year for European equities. The DAX is gaining 24 points, and here in the UK, the FTSE 100 just up 0.1%. Basic resources, as we'll see in the sectors, weighing a little bit as iron ore down a little over 4% on speculation that Chinese officials are going to curb pricing, at least take a closer look at the rally that we've seen in terms of that commodity. Let's switch it over and have a look at how things are playing out across these sectors then. And we talked about the dollar in the headline. It's actually come back a bit in terms of the Bloomberg Dollar Index. The last time I checked, it was up about 0.3%, and the yen as well weakening about 0.7%. It's still around that 128 level as we look ahead to the BOJ and speculation, of course, around what they do with their yield curve control policy come Wednesday in that decision. Top of the list, healthcare, one of the defensive sectors, gaining 0.6%, food and beverage up 0.4%, and you have about, 6 sectors currently in the red this Monday morning, led by travel and leisure, down 0.7%. Let's get out to Davos now. The week of Davos and the World Economic Forum is on us. Of course, the world's decision makers and market movers, they are converging on the Swiss Alps as we speak for the first winter gathering since the pandemic disruptions. And to kick off our week of high-profile interviews, our very own Francine Lacquart, of course, joining us with the head of one of the world's largest sovereign wealth funds. Good morning, Francine.
Good morning, Tom. Well, I'm delighted to be joined by the Chief Executive Officer of the Qatar Investment Authority. He is Mansour Ibrahim Al Mahmoud. Thank you so much, Your Excellency, for joining us. First of all, I have to say climate change, you can feel it. Yesterday was like the warmest week on record, and now I think it feels like it's about -20. We're not there yet, but it feels like it. When you look at the world economy and when you look at investment opportunities, are you more confident about what's ahead in the next 12 months than you were a year ago?
See, as you know, Francine, it's a challenging time. As you know, inflation is the main topic for the global economy. Central banks are trying to contain it. This means that they have to raise interest rate, which will slow the economies. Europe is in very difficult situation right now. U.S. will be in recession. China is just opening up, but they need to have a momentum. So definitely it's a challenging time, and the challenging time will continue for, on this year as well. But the good news that we have seen some numbers, which is promising that, you know, we are on the right path in terms of the containing of the inflation. And I hope by the end of this year and perhaps or next year, things will come back to normal.
I mean, does this create opportunities for the QIA because valuations are depressed, because certain assets are cheap? So are you adding to your investments?
Absolutely. This is always, we see this as an opportunities to really reposition our portfolio somehow. We always highlight the weaknesses that we have in our portfolio, and we wait for these sort of correction in the market to fulfill the weaknesses that we have. So definitely this is a time of reposition. It's a time to fulfill a gap and weaknesses in our portfolio, and we will always continue investing.
So how are you repositioning that? I know you were very interested in technology companies. Has that changed, or are you adding to that because of depressed valuations?
Absolutely. This is not even in technology only, but, you know, Asia, U.S. market. Technologies is something that we said that we need to chase our exposure in that market. So we are investing even in Europe, even in some other sectors, which is the venture capital, for example, where we are adding more exposure. Definitely, it's a time to redeploy in some investment in the right valuation.
So, what kind of companies are you looking for? Is it you know, jewels like, or you know, crown jewel like Harrods, for example, or things like that you're looking to acquire, or is it, you know, bigger companies?
Not really. I mean, we are not focusing on only trophy assets. When we go, we have a very fundamental process in terms of evaluating opportunities, and we embedded the scenarios that we see in the market. We are very connected to the market. We know what's going on, and we evaluate opportunities based on the fundamental aspect. So whether this is a trophy assets or non-trophy assets, we always deploy investment. If we find the trophy assets, that's fine. In the right valuation, definitely we will acquire it for our future generation.
We talked in Qatar about Twitter. You're one of the big investors in Twitter, and I feel like in the last 8 months, it's gone up, it's gone down. I mean, we talk about Twitter and Elon Musk every day.
Yes.
Where are we on that?
You always ask this question. I mean, as you know, we are an investors among, you know, a consortium of investors. We are financial investors. We engage with the management, with Elon, in terms of the plan that he has for the company, and we believe on this, and we trust his leadership in terms of turning around the company. So we are into this, and we are committed to the plan that we have made to the management.
Have you asked him to tweet less in the last 8 months? There was so much volatility. Do you get involved in those calls?
Not really. I mean, we do not really involve to that extent in terms of. Again, he has our trust, and we are sure that he would manage it very professionally.
Is there another technology company that looks attractive at the moment? We've seen a lot of job losses, a lot of job cuts, a lot of cost savings. When you look at Asia, I know you can't really get involved in SoftBank, but is there something of that sort that you'd be looking at?
Absolutely. I mean, in the whole area of technologies, we are interested. I mean, digitalization is a very important theme that we are taking. So we are investing in a software application that would play a role in the digitalization. And again, Francine, we are a long-term investors.
Yes.
So we always really take a fundamental view into the sector and the theme that we are investing. Any correction in the market, it doesn't mean that we need to really play the tactic unless we would like to close a gap in our portfolio. But overall, we are a long-term investors, and we take a long-term view.
What about banks? I know in the past you've been very invested in banks. It feels like it's almost a juncture because of higher interest rates for a lot of the banks.
See, financial institution is very important pillar in the mix of the portfolio that we have in different markets. So ideally, in any exposure in any particular market, we would like to have a very balanced mix on the portfolio, whether this is a technology or financial institution or real estate, infrastructure. We always aim to have this balance. So investing in a financial institution will always be a theme for us. Yes. But we're also moving to a fintech, a digital financial institution, who is becoming very popular and a very important theme in our investment.
But this would be what, something only, mobile banking online only, or a big company with a big presence online?
It could be only online banking only, or an insurance, for example. So it could be anything. This is a very important, and again, it's line up with our important theme, which is digitalization is becoming very important for the humankind.
Yeah. How much do you like football? I know there's speculation on the back of the World Cup, probably unrelated.
Yes.
That the QIA is also interested in buying a big stake, a sizable stake in one of the big UK football.
See, I will be too general here. I mean, football's clubs and the sport is becoming very commercialized in a way. Especially now fans are looking into this as an experience. So they would like to go and experience and entertain themselves. At the same time, digitalization is becoming very important for this. So the business model of these institutions, let's say, are becoming very commercialized and very investment friendly. So you see even funds are becoming investors in this. And sovereign wealth funds are becoming also investors in some of the club. And you will not be surprised if we invest this. But again, we go into a very fundamental process and making sure that if we invest, this is a very commercially driven for our future generation.
But would this be chosen actually on paper? I mean, we know that Man U is maybe up for sale. We know that the Spurs are looking maybe to be sold as well or have a stake. Is this a stake? Would you buy a whole club? And if there are two equal ones, how do you choose?
It's a process that we go through. It's a discussion that we engage with the management. We have not made our mind yet, but this is a very commercially driven decision that we go through. Yeah. And again, sport is becoming very important theme as well. People are engaged more in sport, and digitalization is making it more attractive to investors as well.
And so do you see the Premier League changing in general just because it's so much more attractive, and we're seeing so many also American funds getting in?
Absolutely. Its league is becoming also another aspect, which is also I saw a lot of investors are investing in a sport league as well. So, this is, I think, a theme that you will see it very active in the coming years as well.
Is there anything else that we should be looking for? I don't know whether you're invested in crypto or some of the big themes. I mean, you're going after, things that people love. So this is, trophy assets. It could be football. It's technology. Twitter, certainly everyone's talking about it. Is there something else that you want to be in?
See, crypto, we had, it is the same view that we had before. We are not interested in the cryptocurrencies, but we are interested in the blockchain. So any application that's using a blockchain would be of our interest. This is a technology that came to remain. Sustainability is another theme that we are interested in, and this is also a theme that came to stay for a long time. And we would like to play a role in the transition that the globe is going through. And we are investing in all aspects, whether this is in the technology that play a role in the sustainability or in the infrastructure, renewables. The latest investment that we had, for example, with RWE, a German company that invests in the renewable, it ticked the box it ticked all the box for us. It's renewable. Yeah. It's a management that we like. It's an expansion in the U.S. market. So this is a very important theme as well that we will continue seeing us very active.
What's the ultimate trophy, actually? Is there one thing that, if it came up at the right price, you would absolutely no doubt try and buy?
I don't have a name in my mind, but definitely, again, if this makes sense commercially, we will invest. Again, having a trophy asset is not really a theme it's always about how fundamentally makes sense for the future generation. That we manage the fund for them.
Yes, so due diligence first. Thank you so much, sir, for joining us today. The Chief Executive there, Officer of the Qatar Investment Authority, is Mansour bin Ibrahim Al Mahmoud. Now, with that, I'm going to send it back to you, Tom, and we're going to have plenty of interviews throughout the day.
Great interview, Francine. Thank you very much indeed. Elon Musk still has their support and the opportunities potentially in the Premier League here in the UK. We're going to have plenty more, of course, as Francine said, from the World Economic Forum in Davos. Our lineup of guests across the week includes Bank of America CEO Brian Moynihan, the WTI Director General and South Africa's President Cyril Ramaphosa. There is plenty more coming up, of course, across your European equities. Just checking in on these markets, currently just gaining 0.1%. So pairing some of the earlier strength, and the futures now in the US on a national holiday, but when they reopen, looking down by 0.4% on the S&P E-minis. A beautiful shot there of Davos. Stay with us. This is Bloomberg.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Tuesday, a Bloomberg exclusive live from Berlin, where German Chancellor Olaf Scholz sits down with Bloomberg editor-in-chief John Micklethwaite. A wide-ranging conversation only on Bloomberg, your global business authority.
Welcome back to the Open. We are 47 minutes into the European trading day. The optimism at the start of the session has faded. You're gaining just 0.1% on the benchmark. You're flat over in France on the CAC 40. You're just up a little under 0.1% over in Germany on the DAX. And the dollar is back. Strength in the dollar, commodities selling off. Let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. Nepalese authorities say at least 68 people were killed when a Yeti Airlines flight crashed on Sunday. The twin-engine ATR-72 turboprop took off from Kathmandu and came down close to its destination of Pokhara Airport. The aviation authority says the weather was clear and there was no distress call before the crash. 15 foreigners and at least 53 Nepalese were among those on board. China has announced almost 60,000 COVID deaths over the latest 5-week period, renewing calls for more information about the latest wave of infections. The WHO says it's analysing the data while urging Beijing to share more details, including on subvariants. Several studies suggest the number of fatalities in China could be much higher than the official count. A Republican lawmaker has called on the White House to turn over visitor logs to President Biden's home in Delaware after classified documents were found at the residence. The move comes after the White House said that on Saturday, lawyers had discovered more classified material than previously announced. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Okay, Laura Wright here in London. Thank you very much indeed. Coming up, Brexit negotiators, they are closing in on a deal over trading arrangements in Northern Ireland. Finally, that story is next. We'll bring you the details. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet's 737 MAX aircraft. Airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Welcome back to the Open. Happy Monday, 51 minutes into your European trading day. Very modest gains now across the European benchmark of just 0.1%. And the futures in the US on this national holiday stateside are pointing firmly lower, between 0.4 and 0.6% on the Nasdaq futures. Let's get back to what's happening between London and Brussels, though. UK and EU negotiators are closing in on a resolution to end their very long-running dispute over post-Brexit trading arrangements in Northern Ireland. Joining us for the details then is Bloomberg's UK correspondent Lizzie Burden. Lizzie, what are the two parties set to discuss this week, and how close are they finally to some kind of resolution?
So you're going to see the Foreign Secretary James Cleverly meeting the European Commission's Maroš Šefčovič today, and it's the second meeting of the year. really what they're trying to establish is whether there's enough common ground to enter another tunnel, a phrase we've heard a lot through the Brexit saga, but that's the secret intensive talks that potentially could lead to a bigger agreement. But the reason that we're on the brink of potentially entering the tunnel is that they had this technical breakthrough last week in terms of using this real-time database to track the flow of goods between GB and Northern Ireland, which could lead to a broader agreement on customs. But there are still lots and lots of areas that they need to find agreement on. For example, the European Court of Justice, that's a red line for Brussels, also checks on agri-food products, state aid, VAT, and even if Rishi Sunak could get Brussels on side, even if the opposition Labour leader Keir Starmer has said that he'd help a bill through Parliament, Sunak would still need to get the Eurosceptics within his own party on side. He'd still need to get the Unionists in Northern Ireland on side, and they could prove the most unpredictable because they'd oppose anything that resembles a border in the Irish Sea.
Okay, so maybe we have to check our optimism/relief as we look to maybe entering this tunnel. You talked about the granular aspects of this deal. If we zoom out, the broader implications, how significant would a deal be?
Well, the goal is to try and get an agreement by the 25th anniversary of the Good Friday Agreement to coincide with a visit from Joe Biden. It'd be hugely significant for the UK, a real win for the government, and especially for Northern Ireland. You've had this political stalemate rumbling on, but I have to say, and Maria Tadeo would tell you if she were here, it's probably not as big a deal in Brussels because their officials have digested the fact that Brexit has happened, and they've frankly got bigger fish to fry. They've got, of course, the war in Ukraine, but also the US Inflation Reduction Act.
Okay, Lizzie, thank you very much indeed. Lizzie, of course, will be across all the details this week and beyond on this negotiation and whether indeed there is significant progress, I should say. Our UK correspondent Lizzie Burden there. Let's switch focus. The top red story right now on the Bloomberg is the BOJ potentially opening this Pandora's box for traders. Of course, they have their meeting on Wednesday. Japan's benchmark bond yield rising above the central bank ceiling for a second day as investors hedge against another hawkish move by the BOJ. Joining us for the context is Christina Kino, managing editor for Bloomberg City Latest. Christine, good morning. It is a huge week for central banks, predominantly, of course, the BOJ and its decision. Citibank betting that maybe they're going to drop yield curve control altogether. The significance of what the BOJ is wrestling with for these markets then?
Absolutely, Tom. I think it's accurately described. It has opened a Pandora's box when it comes to rethinking about policy, especially because the Bank of Japan really is kind of the last frontier of those central banks that have stuck to ultra low rates and still sticking, or previously sticking, to its bond buying policy or keeping those yields in control. And now they're kind of taking a step away from that. And this is very much a classic tug of war between central banks and markets, right? When the Bank of Japan indicated that it's willing to go an inch in one direction, the market is daring it to go that extra mile and really kind of make a big exit out of this policy, though they may be reluctant to do that.
Yeah, and of course the speculation from some had been that maybe they wait until Kuroda steps down in April. But in terms of the money flows across these markets, there's a significance beyond Japan on bets of a strengthening yen and high yields.
Absolutely, Tom. I mean, I think, part of the moves that we've seen in global markets definitely being contributed to in Japan. We've seen just incredible yen weakness last year. That was really a very big part of the flip side, which is the dollar strength story. And so that definitely plays into that. And then on the bond market side of things, I mean, Japan has always been a market that you sell, right? And in lieu of other higher yielding assets. And so the big question now is, would those powerful Japanese investors that really like putting their money to work globally, will they start rethinking where they put their money? Perhaps they put it in Japanese bonds.
Christina Kino, fantastic. Thank you very much indeed with the context on the BOJ, that meeting on Wednesday. Christina Kino, managing editor for Bloomberg City Latest. The yen is slightly softer in the session, down 0.7% at 128. The context is it's strengthened, of course, quite significantly. Markets here, range band in Europe, futures low in the US. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Was going to keep rate World Cup. This is a 3.
As the economic picture down.
Is it the OK's getting ready to make
This is Bloomberg.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacroix, live in Davos. Now, here's what's coming up on today's program. Inflation expectations dropped to the lowest levels in nearly 2 years. The vice chair of BlackRock, Philip Hildebrand, tells us the U.S. and Europe are still heading for recession. Top EU and UK negotiators speak today to gauge whether a fix to the post-Brexit trading arrangements for Northern Ireland is within reach. And the World Economic Forum is back to its winter alpine setting here in Davos after 2 years of pandemic disruption. So don't miss our live interviews all week, including more from our interview with the chief executive of the Qatar Investment Authority. So coming up this hour, we'll have not only the QIA, but we'll get you interviews with top bankers. In just a moment, we'll also speak to BlackRock Vice Chair, Philip Hildebrand. But first, let's check in on the markets with Danny Berger. Danny, it's all about currencies today. And good morning.
Good morning to you, friend. It is all about currencies for us who are in front of a Bloomberg terminal in a warm office, not out there in the Alps. But yes, we have seen the yen give back the gains that we saw this morning. That's a third asset I have on that board for you. The dollar is stronger, but before it was all about JGB's breaching that 0.5% ceiling that the BOJ had set. Will they change that again come Wednesday? But elsewhere, there is some decent risk appetite. Again, it is starting to fade. We had the best start to the year for European equities on record. Really, the idea that nat gas is lower, China's reopening. So we are having a reassessment of the global economy. But Bitcoin, Francine, that has fallen back below 21,000. It was up more than 1%. Meanwhile, iron ore tumbling in today's session, with China warning about false information in the market, saying they're going to crack down more. That has dented sentiment, Francine.
Danny, thank you so much. Now we're joined here in Davos by the BlackRock Vice Chair, Philip Hildebrand. Philip, as always, thank you so much for joining us. Really, you're a Davos veteran. I know we have to go through the note that you put out, but what's the mood like? I don't know whether there's always a counter mood. If people are too optimistic, it's bad news for the world economy.
Yeah, I think, first of all, it's great to be here. It's good to see the world coming back to Switzerland and reopening. That's very good news. Look, I think people are still shaped by a very difficult year. So I think there might be a risk that we get into a kind of excessive pessimism, judging by what we've all been through. There are lots of reasons to be worried, but I think there are also many opportunities. So we'll see how it settles in.
So do you think inflation has peaked?
Oh, very much so. I think inflation is going to drop very, very quickly. In fact, I believe many of us will be surprised how quickly it will fall. The problem is it will fall very quickly. Sort of 9 to 4 will be the easy part, and then it's going to get very difficult to get inflation back to price stability. So, but at the moment, I think the initial phase will be a very rapid decline in inflation.
So what does it mean for central banks, Philip? And you lay this out beautifully, actually, in your World Outlook. If you're a central bank, if you're like the ECB, or even if you're the Fed, do you have to be much more careful in how you manage this from now until the summer?
I think the central banks are going to continue on their tightening path. They're going to be very careful, very focused on not losing the long-term inflation expectation anchor. And so I think we're going to see, I don't see any chances, frankly, of easing this year. I think the market has that wrong. So they're going to make sure that we can really not just get from 9 to 4, but also limit any kind of risks that inflation expectations become unanchored. And because all of this is driven by labor market constraints, principally, it's still a supply side story. It's going to be very difficult to get inflation kind of below 4%, let alone below 3%. So we're in the easy phase, in a sense, now of this tightening cycle.
But is there a problem with that markets don't understand that? So we have, for example, Fed officials saying, look, don't expect a Fed pivot anytime soon, but the markets keep on testing it.
That's right, and I think this notion that there could be easing this year seems to be, to me, to be far too optimistic, because if you're the central bank, you're going to want to make sure that you can get this done, that you don't risk resurging suddenly of inflation expectations further down the road. So I think we're going to see at best some sort of pause, but not quite yet. And the market may need some readjusting relative to these expectations that we could be seeing some easing. And this is what we call it's a new regime. The great moderation is over. This notion that when the economy struggles, central banks will ease, that was true in the past. I don't think it's going to be true this time.
And yet it's quite incredible to see actually the leverage being taken, or for companies that are leveraged, and interest rates going from 0 or 1% to where we are now without more bankruptcies. Are you expecting zombie companies to crop up?
I think it all depends how much damage will have to be inflicted on the real economy to get this last phase of the inflation being squeezed out from, let's say, 4 back to 2%. And that will be the big trade-off. So this will not come without cost. I do suspect at some point the central banks will kind of back off. And not drive inflation all the way back to 2%. That might be a moment when the market can recalibrate. But for now, I see the tightening process continuing to ensure that we don't just go from 9 to 4, but can actually continue to bring inflation back under control.
So when's crunch time? I mean, if we try to put inflation 4 to 2%, does that coincide with the beginning of the summer months, or could it be later into the year?
I think we're going to see very quickly kind of dropping to 4. That's going to be, in a sense, the easy part. And then the question will become second half of the year, mid-year, what do the central banks do at that point? Do they continue and tighten far beyond what is currently expected in order to drive inflation back to 2%? I think that would entail pretty significant recessionary tendencies in the real economy, a lot of damage to the real economy. Or do they at that point say, okay, we've done enough, let's see what happens if we let inflation persist for a bit above the 2% target.
So what does this mean for markets overall?
Well, yeah,
volatility or pain?
So there will be opportunities, not least in credit, in short-term bonds. We now have a very different outlook again when you look at where interest rates are. So for long-term investors, many opportunities, I think, in that space. For equities, I suspect until we know what the central banks are going to do with that residual piece of the inflation adjustment from, let's say, 4 to back to 2%, there are going to be some challenges around equity markets. So some of the enthusiasm right now with this notion that the central banks could ease again imminently, I suspect that's premature. So I still see some volatility here going forward until we know how the central banks are going to handle this difficult trade-off that they face.
But in November and maybe early December, the talk was all about the lack of liquidity in the markets and what that could do in terms of schisms or things going wrong. We don't really talk about that anymore.
Yeah, the markets have, if you think about what's happened in the kind of Bitcoin space, in many other areas, the market has actually adjusted reasonably well. The banking system seems to be in pretty good shape structurally relative to 2008. We don't see the excessive leverage in the system. So I think there is, it's one of the positive aspects of the story here that we haven't seen kind of major disruption in the financial markets as a result of these tremendous adjustments. I mean, 2022 has been a year of amazing transition and adjustment.
But could it just be delayed?
It could be. I think, again, it depends very much on how damaging the recessions are going to be, which, again, in turn will be a function of how aggressive will the central banks ultimately be to get inflation back to 2%.
There's the COVID component, I guess, right? There's a lockdown component. Does that change consumer behavior? Because when we say inflation has peaked, but also consumer behavior has stayed strong, could we be looking at a distorted reality?
I think what we're going to see, this is one of the reasons I believe we're going to have, certainly in Europe, a mild recession, probably quite likely in the US as well. The savings that have been accumulated and generated as a result of COVID, they're going to run off by the mid-year, by the summer. That's going to be exactly the time when the tightening that we've seen, this has been the most aggressive tightening cycle in history, basically, when that starts to kind of bite in the real economy. So that's going to be a difficult moment mid-year when you have the savings effect fading, and at the same time, the rate cycle, the increases in interest rates kind of feeding through the real economy.
That's the test time. Philip, thank you so much. Philip Hildebrand there stays with us. Of course, he's from BlackRock. We'll talk a lot more also about maybe the banking system. Coming up, we'll bring you more from my earlier interview with the chief executive of one of the world's largest sovereign wealth funds. He's a Qatar Investment Authority chief executive. We talked about football, Elon Musk, Twitter, and much more. This is Bloomberg.
Digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing? When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
But look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
News breaks. No one covers the world like Bloomberg.
In addition to him pleading not guilty, as we had expected, to 8 criminal counts here, there was a lot else that happened.
1 million people are getting infected every day, and that's going to rise to 3.7 million by January.
The UK is the only G7 economy that hasn't returned to its pre-pandemic level yet.
Bloomberg, your global business authority.
Snow-covered Alps, private jets, and coveted white badges. The world's elite will descend on Davos for the World Economic Forum's first winter meeting since 2020. The themes on the official agenda are a bit of a mouthful, so let's break it down. Here are the top 3 things that'll dominate this year's agenda. Number 1, it's all about inflation. The post-COVID recovery crashed headfirst into surging CPI in 2022. Supply chains stretched to breaking point and prices soared, putting pressure on consumers. The Fed and central banks around the world responded with aggressive rate hikes, taking the possibility of a recession in their stride. But were they behind the curve? Number 2, a shifting geopolitical landscape.
Oh, yeah.
Russia's invasion of Ukraine forced many nations to choose sides and shore up energy supplies. Russia was absent from the forum's summer gathering in May and won't be there this year either. China-U.S. relations also hit a new low over Taiwan and human rights. China is looking to come back bigger than ever at its first gathering since the pandemic, but will they receive a warm welcome? Number 3, crypto and regulation. A late addition to our top three thanks to the implosion of Sam Bankman-Fried's FTX empire in November. His arrest and extradition to the US has given regulators more ammunition in their drive to rein in the crypto industry. So are we already past peak crypto? Those themes aside, the big question may be more about the event itself. With criticism in recent years about its relevance, can this year's Davos produce anything more than talk? Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacroix here in Davos. Now, we're getting a little bit of breaking news. The German defense minister has requested, and this is a headline that Bloomberg wrote just a couple of minutes ago, has requested to step down. Now, there are a number of other media organizations also reporting more headlines, which we'll get to in a second as soon as we make sense of them. Some of them are a little bit cryptic, so we'll get to the bottom of it. The latest is the defense minister has decided to step down, and this is after a series of gaffes, we understand, and missteps. Now, still with us here in Davos is the BlackRock Vice Chair, Philip Hildebrand. Philip, thank you so much for staying with us. We were talking a little bit before about inflation, the Fed, maybe some of the central bank divergence that we could see ahead. I mean, some of this divergence is going to be very nuanced. Who has the most difficult job right now? If you look at the ECB, the Bank of England, and we talk about the UK, but also the Fed and the Bank of Japan.
I think probably the Bank of England, because it has, in a sense, the worst of both worlds. It has the labor market supply-side constraints that we see elsewhere, and it also has the energy shock. So in a sense, you know, Europe has mostly the energy shock. The U.S. has mostly the supply side, the labor market constraints that are leading to these wage pressures and tightness in the labor market. The Bank of England really is hit with both challenges at the same time. And you can see this in the fact that they've had to do the most. And the trade-off, the cost of bringing inflation back under control will be the highest, in a sense, in the UK as a result of this constellation of being hit by both of these forces at the same time.
So is there anything that they can do to calibrate it? Because the Bank of England governor is also having a pretty tough time, I have to say, from all sides, about, you know, being too slow, being too aggressive with interest rate hikes. Like, how does he do?
Well, I think you have to be honest about it. And that's, you know, this is the new world. In the old world, the great moderation, you could get inflation under control and everything else would be fine. Now, bringing inflation back under control means you have to damage the real economy. It means you cause a recession.
Yeah.
And there's no way around this. This is why we are in a new regime, why investing has become more difficult. It's much more complicated. And I think the best thing the central banks can do, and more or less they all do this now, is to be open and acknowledge that bringing inflation back under control, bringing price stability back into the game, entails essentially recessions. So think about it in this way. In the past, central banks always came to the rescue to get you out of a recession. And now we have exactly the opposite. The central banks have to, in a sense, engineer recessions, or at least contracting economies, in order to get inflation back under control.
How do you see China opening, or you know, opening with I guess great difficulty? We know we have also the vice president of China here, so there's only one G7 prime minister or president, and that's the German chancellor. But we do have the vice president of China.
I think this week is important here because, remember, nobody has been to China in several years. There's been very limited interaction, even by telephone, by video. So to actually meet the Chinese leadership, the economic leadership at least here, will be a very important part of the financial industry, the corporate sector. From what we know from our office in China and elsewhere, the opening is happening in a very aggressive way.
Yep.
I think that should lead to more easing of the supply side constraints. So when I talked earlier about the rapid decline in inflation, that's certainly going to contribute to it. So there are definitely elements of very good news in terms of bringing inflation rapidly down from these very high levels at this point. And China, I think the reopening of China is a big part of it. How the COVID, the health dimension of this works out, I think is very difficult to judge from afar.
Are you expecting a lot more, you know, a lot less regulation? What's your one question to the vice president when you meet him?
I think the main question today will be, where are they on the calibration between control and markets, in a sense, right? And we've seen an extreme move towards control And the question is, are we seeing some recalibration in order to get growth, in order to reopen, in order to help address the world's supply chain problems? So in a sense, this is an opportunity to get, in a world that is fragmented now. Geopolitically, we live in a very different world, great fragmentation, a lot of strategic competition, confrontation in some cases. Can we have the Chinese leadership sort of be at least partly in a cooperative stance again in the context of helping us get out of these tremendous supply side constraints that we've seen as a result of COVID and the reopening?
Philip, thank you so much, as always, for being with us. Philip Hildebrand there, the BlackRock Vice Chair. Now, coming up, closing in on a resolution. The EU and UK negotiators move towards a fix for their dispute over trading arrangements in Northern Ireland. We'll bring you that story next, and this is Bloomberg.
The innovation agenda is going full speed on mitigation. That's where, you know, there's 100 companies, Breakthrough Energy's funded. There's
by mitigation, you mean mostly energy. You mean everything to do with energy. You mean generation of energy. You mean batteries. You mean transport. You mean all of the new, and there's some renewables that are already traditional, but more that need to come out. So that's the package that you're talking about, mitigation? Yeah. Or are you also talking about agriculture as mitigation?
Yeah, so every area of emissions, you know, the world tends to focus on passenger cars and electricity. That's not a third of emissions. And so the focus on the easiest third, you know, now 4% of new cars are electric, you know, so that's the field that we're furthest along. About 4% of energy generation is wind and solar.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power. This is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance, early edition on Francine Lacqua here in Davos. Now let's get straight to the Bloomberg First Word News. In London is Leanne Gerrans. Hi, Leanne.
Hi, Francine. Nepalese authorities say at least 68 people were killed when a Yeti Airlines flight crashed on Sunday. The twin-engine ATR-72 turboprop took off from Kathmandu and came down close to its destination of Pokora Airport. The aviation authorities said the weather was clear and there was no distress call before the crash. 15 foreigners and at least 53 Nepalese were among those who were on board. Now, China has announced announced almost 60,000 COVID deaths over the last 5-week period, renewing calls for more information about the latest wave of infections. The WHO says it's analysing the data while urging Beijing to share more details, including on sub-variants. Several studies suggested the number of fatalities in China could be much higher than the official count. A Republican lawmaker has called on the White House to turn over visitor logs to President Joe Biden's home in Delaware after classified documents were found at the residence. The move comes after the White House said on Saturday that lawyers had discovered more classified material than was previously announced. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, we're here in Davos. We haven't been here in the winter for about 2 to 3 years. It was pre-COVID. I remember one pretty poignant interview, actually, with the ECB president, Christine Lagarde, when we asked for the first time about this virus called COVID. That was in 2020, and then since, the world economy has changed. So we're back in the Swiss Alps, and I have to say, the main attraction is the fact that the Chinese delegation is back. Now, we're going to have meetings throughout the next couple of days. We'll at all of them. No Russian or Chinese billionaire, though, are showing up. Olaf Scholz is actually the only G7 leader attending Davos here. On their agendas, the 53rd World Economic Forum is called Debating the Theme of Cooperation of a Fragmented World. Now, what this means is that we'll look at 3 main things. One is inflation and where the world economy is headed. Tomorrow, I'll have a number of panels, not only looking at the cost of living crisis, but looking at what the probability of a recession and what kind of recession we'll get. The other big question, of course, is not only on geopolitics, given that Russian oligarchs for many years were very present in Davos, but we'll try and understand, have a better and deeper understanding about what's going on, for example, with Ukraine. And the third question is, of course, about cryptocurrency. Given that this was the big fallout in November, there is at least, or much less of a presence than just in May when we had the last World Economic Forum with, for example, Binance plastered in all of the promenade. We don't have that at the moment, but we'll try and speak to a lot of the government officials, but also a lot of the bankers to see where they stand on crypto. Also, in the last half an hour or so, the German defense minister, Christine Lambrecht, has resigned following days of speculation over her future. This is a blow to the Scholz government as it weighs crucial decisions over arming Ukraine. We'll have plenty more, of course, on that throughout the day. Join us here. It's just day 1 of the World Economic Forum. We have 5 more days ahead. This is Bloomberg.
More activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
Shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Inflation expectations dropped to the lowest level in nearly 2 years, but the vice chair of BlackRock, Philip Hildebrand, tells us the U.S. and Europe are still heading for a recession. Top EU and UK negotiators speak today to gauge whether a fix to the post-Brexit trading arrangements for Northern Ireland is within reach. And the World Economic Forum is back to its winter alpine setting in Davos after 2 years of pandemic disruption. Don't miss our live interviews all week, including more of our conversation with the Chief Executive Officer of the Qatar Investment Authority. So good morning and welcome to Bloomberg Surveillance. I'm Francine Lacroix here in Davos. The Qatar Investment Authority is one of the largest sovereign wealth funds. Well, our first interview here in Davos was with the QIA Chief Executive. We had a wide-ranging discussion where, amongst other things, we discussed investment in tech. Listen in.
In the whole area of technologies, we are interested. I mean, digitalization is a very important theme that we are taking. So we are investing in a software application that would play a role in the digitalization. And again, Francine, we are long-term investors.
Yes.
So we always really take a fundamental view into the sector and the theme that we are investing. Any correction in the market, it doesn't mean that we need to really play the tactic unless we would like to close a gap in our portfolio. But overall, we are long-term investors and we take a long-term view.
What about banks? I know in the past you've been very invested in banks. It feels like it's almost a juncture because of higher interest rates for a lot of the banks.
See, financial institution is a very important pillar in the mix of the portfolio that we have in different markets. So ideally, in any exposure in any particular market, we would like to have a very balanced mix on the portfolio, whether this is a technology or financial institution or real estate, infrastructure. We always aim to have this balance. So investing in a financial institution will always be a theme for us. Yes. But we're also moving to a fintech, a digital financial institution, who is becoming very popular and a very important theme in our investment.
But this would be what, something only, mobile banking online only, or a big company with a big presence online?
It could be only online banking only, or an insurance, for example. So it could be anything. This is a very important, and again, it's line up with our important theme, which is digitalization is becoming very important for the humankind.
Yeah. How much do you like football? I know there's speculation on the back of the World Cup, probably unrelated.
Yes.
That the QIA is also interested in buying a big stake, a sizable stake in one of the big UK football.
See, I will be too general here. I mean, football's clubs and the sport is becoming very commercialized in a way. especially now fans are looking into this as an experience. So they would like to go and experience and entertain themselves. At the same time, digitalization is becoming very important for this. So the business model of these institutions, let's say, are becoming very commercialized and very investment friendly. So you see even funds are becoming an investors in this. And sovereign wealth funds are becoming also investors in some of the club. And you will not be surprised if we invest this. But again, we go into a very fundamental process and making sure that if we invest, this is a very commercially driven for our future generation.
But would this be chosen actually on paper? I mean, we know that Man U is maybe up for sale. We know that the Spurs are looking maybe to be sold as well or have a stake. Is this a stake? Would you buy a whole club? And if they're two equal ones, how do you choose?
It's a process that we go through. It's a discussion that we engage with the management. We have not made our mind yet, but you know, this is a very commercially driven decision that we go through. Yeah. And again, sport is becoming very important theme as well. People are engaged more in sport. And digitalization is making it more attractive to investors as well.
And so do you see the Premier League changing in general just because it's so much more attractive? And we're seeing so many also American funds getting in.
Absolutely. Its league is becoming also another aspect, which is also, I saw a lot of investors are investing in a sport league as well. So, you know, this is, I think, a theme that you will see it very active in the coming years as well.
Is there anything else that we should be looking for? I don't know whether you're invested in crypto or some of the big themes. I mean, you're going after, you know, things that people love. So this is, you know, trophy assets. It could be football. It's technology. Twitter, certainly everyone's talking about it. Is there something else that you want to be in?
See, crypto, we had, you know, it is the same view that we had before. We are not interested in the cryptocurrencies, but we are interested in the blockchain. So any application that's using a blockchain would be of our interest. This is a technology that came to remain. Sustainability is another theme that we are interested in, and this is also a theme that came to stay for a long time, and we would like to play a role in the transition that the globe is going through. And we are investing in all aspects, whether this is in the technology that play a role in the sustainability or in the infrastructure, renewables. The latest investment that we had, for example, with RWE, a German company that invests in the renewable, it ticked the box it ticked all the box for us. It's renewable. Yeah. It's a management that we like. It's an expansion in the U.S. market. So this is a very important theme as well that we will continue seeing us very active.
What's the ultimate trophy? Actually, is there one thing that, you know, if it came up at the right price, you would absolutely no doubt try and buy?
I don't have a name in my mind, but definitely, again, if this makes sense commercially, we will invest. Again, having a trophy assets is not really a theme that it's always about how fundamentally makes sense for the future generation. You know, that we manage the fund for them.
Well, that was my interview with the Chief Executive of the Qatar Investment Authority, Mansour Ibrahim Al Mahmoud. So we'll have plenty more coming up. The former Prime Minister of Finland, Alex Stubb, he joins us right here in Davos. We'll talk about German politics, we'll talk about Ukraine, and of course, geopolitics as well. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, the German Defense Minister, Christine Lambrecht, has resigned following days of speculation over her future in a blow to Chancellor Olaf Scholz's government. We're joined now by the former Prime Minister of Finland, Director at the European University Institute for International Governance. He's Alexander Stubb. So thank you, as always, for joining us. Look, you're an expert in geopolitics. I know you've been following, of course, not only the fragmentation of the world, but possibly the holding of the alliance in the West and what happens with Ukraine. We had that breaking news about half an hour ago about the German defense minister resigning after a series of errors. What does it mean going into, still you're in the winter months, you have to negotiate on Ukraine, you're talking to Putin, and you lose your defense minister?
Well, I think the system actually keeps afloat, which basically means that you have a very strong civil service, you have a very strong government that is able to give some continuation for the system. I mean, remember that the former defense minister of Germany is now the president of the European Commission. And actually the Finnish defense minister at the moment is on paternity leave. So, the system keeps you afloat, so I wouldn't be that worried about it.
When you look at Ukraine and everything that's happening right now, can you put us in the geopolitical context? It seems we worry about it less, but there's still a war. It's still at the footsteps of Europe. Should we worry about it more?
Well, I think it's very important that we continue to discuss it. And the way in which I see it, that this conflict is not about Russia versus the West. It is as much about the West versus the rest. So we're seeing this disruption in global politics and in geopolitics, a world which has essentially been dominated by the West since 1945 and certainly during the post-Cold War era. And I think that's a lot of the conversation that we're going to have here in Davos is how do we get the challengers involved?
Right, and actually it's one country that can really make or break or can certainly make the difference, and that's China. And they're here in Davos. We haven't really heard from them in the last 3 years because of strict lockdowns. What are you expecting from the Chinese?
Well, Chinese presence here is actually quite limited. From what I gather, roughly 60 delegates around the vice premier. Remember when Donald Trump had been elected, and then in 2017, President Xi Jinping was here, sort of the big globalizer, if you will. What we're seeing now is actually more presence from India, which is interesting to see. And of course, India is set to pass China in terms of population this year. So there is this sort of creation of a few power centers. One is the West, in other words, the United States, the European Union. One is China, and then probably India somewhere in between. So it's really interesting times for us international relations buffs.
So globalization is now, a dirty word in many parts of the world. Should we call it something else?
It's difficult to say. I mean, for all intents and purposes, I still think that globalization has benefited, of course, mankind by and large. It's lifted millions and millions of people out of poverty. But at the same time, it is about equal distribution, but it's also about equal representation. So I think a lot of non-Western countries feel that they are not really represented in international institutions. That's why there's a lot of challenge on the multilateral system, on the WTO and the World Bank and the IMF. You know, people want to have a say, but I wouldn't be excessively worried about it. This is the pendulum of global politics, and I actually think we're not entering an era of deglobalization, but probably a regionalization of globalization.
So what does that mean in terms of defense, but also the economy?
It probably means that we're starting to see more protectionist activity. And we saw that with the United States, with the CHIPS Act and the IRA, and perhaps some retaliation coming from the European Union, which I hope we won't do. So I think a lot of people got afraid that the value chains used to be global. Then came COVID, there was Donald Trump, and of course now came the war in Ukraine and Russian aggression. Now people are starting to think, well, listen, should I try to produce stuff at home? How should I protect my economy? It's a really careful balance. I myself am a free trader, so anytime we talk about strategic autonomy, I'm always afraid that it's going to lead to protectionism. But it is a little bit of a balance. I hope that we keep things open.
So I guess a lot of countries also found themselves very vulnerable because of the supply chain issues. Does that change? Do supply chain, I mean, if they change, they take 3-4 years, so is it worth it?
There are going to be some changes. So this sort of Ricardo thinking that you produce where it's most beneficial is probably not going to work. So you're going to find some industrial policy where you start protecting your sort of strategic economy, if you will. But it's very, you know, as we've seen with the United States and the IRA, I think the intention is good. And, you know, the Biden administration says that this is going to, you know, help the green transition. But it's a very careful balance, because if we start going tit for tat protectionism, that's bad for the global economy. And when it's bad for the global economy, it's bad for the local economy as well.
How do you say Ukraine ending? So when you look at NATO and the fact that even 2-3 years ago, we thought that maybe this was something that was, I guess, old and obsolete would be a way of putting it. Certainly it was a U.S. view. Now it's back.
Yeah, definitely. I think what happened was that, you know, Putin mixed strategy and tactics. Everything that he wanted went exactly the opposite way. So he got a European Ukraine, he got a united European Union, he got a rejuvenated transatlantic partnership, and he got a NATO with a new purpose, sort of back to 1948, 1949, as a repellent then to the Soviet Union. And of course, the icing on the cake is that my country, Finland, and Sweden are going to join NATO. So in many ways, NATO is back.
But NATO's back. How much does that aggravate Putin? I mean, when we talk about threats of nuclear war, should we take it seriously?
Of course you have to take it seriously, but I still think that the step in that direction is simply too far. We should also remember that Putin threatens with nuclear weapons. And if we backtrack, that means that he's going to do it again. You see, I was involved in mediating peace in the war in Georgia. Yeah. And he thought, this was easy. I got what I wanted. I was prime minister when Putin took over Crimea. He thought, this was easy. I got what I wanted. So now, if we were to give in, he would think that it's easy going. I think the big thanks in all of this goes to Ukraine and the Ukrainian people. They are the ones who have fought back. If Putin had been able to walk into Kiev in 3 days, as many of us expected, then I think the West would look much, much weaker than it does right now.
So could we have done differently to change the course of humanity, I guess? Is there a critical point where the West could have reacted and should have reacted differently to Putin?
With the wisdom of hindsight, a lot of us believed that interdependence and integration would lead to such relationships that war becomes impossible. I mean, that was the basic philosophy of the European Union, right? That's why we do trade. We become dependent. We didn't know that Putin was what he was. So with hindsight, I guess we could have been tougher after Georgia. I guess we could have been tougher after Crimea, but there's no use crying over spilt milk. Now we just have to go all the way and basically push Russia and Putin out of Ukraine, and hopefully at the end of the day come with a regime change.
Well, what are you most looking forward to in Davos? So it's changed a lot. I mean, we've been covering it for a number of years. Less people, more people, different, of course, industries that want to show up. A lot of Wall Street is showing up, but doesn't necessarily want to be on a world stage.
Yeah, I mean, I always look forward to this. This is, I think, my 8th or 9th time. So you sort of, it's a bit sort of, globalization or international relations on steroids. And I hope to. I'm writing a book actually on the new age of disorder and how competition, conflict, and cooperation is shaping the 21st century. And I want to get some new ideas for that, because I firmly believe that we need to move towards a more dignified foreign policy. It's not going to be a Western-ruled world anymore, and it's a question of how we get cooperation going again.
Alexander, as always, thank you so much for joining us. Alexander Stubb there, Director of the European University Institute School of Transnational Governance and, of course, former Prime Minister. Let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Ineos is to buy assets being sold by Switzerland's Sika to appease antitrust regulators after the takeover of German rival MBCC Group. Sources say the purchase by Ineos values assets at $750 million. Sika's admixture business makes substances that can be added to concrete to modify its properties. Less than £400 million of offices were bought and sold in London in the final months of last year. That's an 88% drop from the third quarter and a 20-year low. The deal-making freeze came as former Prime Minister Liz Truss's proposals for unfunded tax cuts did spook the markets. Now, Credit Suisse is reported to be gearing up to cut more than 10,000% of its European investment bankers this year. According to the Financial Times, the reductions at the Swiss lender comes after an earlier announcement of 9,000 job losses by 2025. Credit Suisse is expected to report its second consecutive annual loss, and that is next month. And Apple's manufacturing partners Foxconn and Pegatron have included Southeast Asia in their expansion plans for this year. Both companies are adding more production capacity outside of China after they encountered serious COVID-related disruptions, and that was last year. Violent protests at Foxconn plant forced Apple to cut its forecast, and output was also halted. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Coming up, Germany's defense minister steps down. We'll head to Berlin for the latest developments on that. And this is Bloomberg.
digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing? When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions. A Bloomberg exclusive live from Berlin, where German Chancellor Olaf Scholz sits down with Bloomberg editor-in-chief John Micklethwaite. A wide-ranging conversation only on Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. I don't know whether you can hear the tuba. I'll make you listen to it. This is what happens in Davos. Sometimes you get serenaded actually by someone. This is not official music. This is just possibly someone who lives in the village who wanted to welcome the participants as they come into the Congress Center. We're day one. We'll have 5 more days of this. Now, the German Defense Minister, Christine Lambrecht, has resigned this morning after days of speculation. For more on all of this, we're joined by Arne Delfs, our Bloomberg government reporter who's live from Berlin. So, Arne, this has been going for a couple of days. Why has she finally resigned?
Yes, hi there. She had really bad coverage, media coverage, the last few months, actually. She made some gaffes. She was never really seen as connecting to the army. So in a way, many people are, especially in the army itself, are relieved that she's finally resigning.
Okay, what does this mean for Chancellor Olaf Scholz?
Well, he doesn't look very good in this, I must say. I mean, for months he has basically stuck to her. He didn't want to drop her. Now suddenly comes this decision, and people wonder why now, because it's a really bad timing. We have the Lunchtime meeting coming up. Actually, U.S. Defense Minister Austin is coming over here on Thursday, and nobody knows actually whom he will meet. It's an odd situation.
It is an odd situation. Arne, do you have any names of who could step up and become defense minister? I mean, it can't take very long to appoint someone.
No, it must go quick. And there are names indeed. There is like the SPD co-leader, party leader, Lars Klingbeil, who's a strong candidate. The problem is there's kind of this gender balance in the cabinet which has to be kept. So maybe it needs to be a woman again. Then Eva Högel, she's a military expert from the Social Democratic Party. There are a number of names circling around, but I would opt for Eva Högel right now, I must say. Yeah.
All right.
Who's an experienced military expert.
Arne, thank you. Arne Delfs there, Bloomberg government reporter. Now, we'll continue our coverage out of Davos. Stay tuned for our interview with the Saudi Minister of Planning and Economy, his Faisal Al-Brahim. Now, Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller and Kaylee Lyons in New York, Anna Edwards in London, and this is Bloomberg.
Jacobson assured me that when he takes the new Hummer EV on long journeys, it's not just fun to drive, it's equipped to go the distance.
I hear so much about road trip anxiety that I wanted to experience it myself. My family likes to drive a lot, so I brought my daughter home from college in this, and it was great. I mean, the computer system is all intuitive. It tells you how to keep track of the battery. It tells you where the charging stations are. It tells you how much power you'll have when you get to the charging station. So it really puts a lot of your anxiety at ease. But as far as driving it, it's a treat.
So where are you on the charging stations? I know General Motors has made an investment in one company. How are we doing in this country generally in getting charging stations in?
So I think this is an area where obviously we can continue to improve as a country and a society. We're doing our best. We've committed almost $1 billion to EV charging. So we've taken that and looked at home charging solutions, local community solutions, and road trip charging solutions. With my daughter, what we would end up doing is probably stopping, grabbing a bite to eat, plugging it into a charger, usually a high-speed charger, to get as much charge as we can, and being there for 20 to 30 minutes. Get us a lot of range, and by the time we've used that range, we're tired, ready to stop again, etc. So it was a really good experience for me, and it's taught me, number one, what are the concerns of the consumer that are ultimately going to drive our vehicles, and then number two, where do we need to focus on addressing some of those anxious points for people?
It's 11 a.m. in London, 10 a.m., 5 a.m. in New York, and 6 p.m. in Hong Kong. I'm Anna Edwards. Welcome to Bloomberg Markets. Dollar bounce as the market questions expectations of a policy shift from the BOJ. Negotiators from the EU and UK look to end the disputes over Northern Ireland as post-Brexit talks ramp up today. And China reporting 60,000 COVID-related deaths in the last 5 weeks. But experts say that may be just a fraction of the true toll. Welcome to the program, everybody. Welcome to this special edition of Bloomberg Markets. It's Martin Luther King Day, of course, stateside, which means no trading there. We're trading here in Europe, though. You can see there the stock 600 in Europe, down by 0.1%. A focus on gas prices once again, and once again they're dropping. So this has been a big success story, if you like, for European growth narratives. In recent weeks, we see the natural gas price down there at 58 euros per megawatt hour. It was up in the mid-300s in the height of the summer crisis. Are we through the worst for the winter? Is certainly a question many are asking. What does next winter have in store is another follow-up question. Iron ore down by 2.8%. Talk of a clampdown, a regulatory clampdown by the Chinese authorities is having an impact. And Brent crude 84.86, a little bit of downside more broadly on commodities today, as we seem to lack conviction really as to whether we're particularly risk on or risk off. This is a focus on FX for you because we have some big events taking place this week, in particular in Japan. I'm thinking of the BOJ meeting. 128 is where we trade on dollar yen right now. We actually see the yen coming down from some recent highs. The dollar a little resurgent this morning, so the dollar index up around 0.1%. The yen then on the back foot a little bit. And we have seen, of course, a lot of expectation being built into the yen ahead of that BOJ meeting. Will we see any tweaks in BOJ policy? We saw some of that at the end of December. Or will we see something even more substantial? There are some in markets who believe we could. Others say that will come later in the spring. Now, Jeremy Stretch, G10 FX strategy head at CIBC, is with me here in London. And can talk us through his views on FX markets. Jeremy, very good to see you this morning. It is, just gone 10 o'clock this morning in London. I think I possibly spooked some in the audience by saying it was 11 earlier on. So it's 10. We've established the time of day. Let's get to the BOJ conversation. Do you think the market has run away with itself a little bit in terms of expectations of this meeting?
Yes, I think that is definitively the case. Clearly, we've been seeing markets trying to pressure the BOJ into further action. We've seen that in terms of the difficulty that the BOJ have been having in maintaining that 0.5% 10-year yield target or yield curve control target over the course of the last couple of sessions. We've seen that reflected in terms of 10-year swap yields also pressing through that 1% threshold on Friday. But I think it is the market has got ahead of itself here. Yes, the BOJ is in a transitory process. It is starting that policy normalization. We did see that surprise adjustment back in December, just before Christmas. But I think the bank would like to see how the market is reacting to that change and that tweak first. And of course, we do have that small matter of the transition at the top of the BOJ coming at the beginning of the second quarter. So I think that's the time when we're going to see more substantive policy changes. So I think for choice, the market's getting a little bit ahead of itself, and so there may be an opportunity to look for better levels to sell dollar yen.
Yes, I mean, some people point to the transition at the top, and that's, Governor Kuroda leaving after many years at the top of the BOJ, and say that means that change needs to happen very soon. And others say, no, that means change needs to happen after he's gone. I mean, how do we view the politics behind that?
Well, of course, there is an issue with the personalities. And as you say, Kuroda's had 2 terms, which is unprecedented at the BOJ. And of course, his terms have been characterized by Arbinomics, and it's been characterized by that policy accord between the government and the BOJ in terms of trying to attain that policy target. But I think there is an opportunity, as we see this transition, for the BOJ to have a monetary policy review, but most importantly also for the successor to Kuroda to look afresh at the policy narrative. And I think one of the big things that we will keep a very close eye on as we move into the spring is the upcoming or the ongoing wage round in Japan. If we are going to see wages moving up, and there are certainly some signs of that, then I think that gives the new leadership at the BOJ, a name to be determined, an opportunity to transition away from this negative interest rate policy and also from yield curve control. But that's a story, I think, for the second quarter rather than the first.
Okay, so it's the wage negotiations as well as the change in leadership that factors in.
Absolutely. I think those 2 factors dovetail together. So I think that's where we would pay particular focus from CIBC's
Okay, so in terms of the timing, that's important. How do you look back on what happened in December, Jeremy? Because running into that, there hadn't been much talk about it being an imminent thing that the Japanese would do. And a lot of people were saying if you're going to get out of yield curve control, you have to do it with a big bang. You can't sort of take baby steps towards it because the markets will instantly test you, and that's just not going to be something that the BOJ can hold back. And yet we saw them tweak yield curve control policy that allowed the conversation to move towards a full change without actually changing. I mean, how do you look back on what happened there in December?
Well, it's absolutely true that we went into that meeting with very, very little expectation in terms of a policy narrative. So our view going back in November when we wrote our year ahead outlook was look towards BOJ policy normalization, but it was a story for this year rather than starting in December. So that's where there was a real surprise, because there was no real precursor or sort of suggestion there was a change or a narrative coming. Now, of course, it was all about tweaking the policy. It was all about market coordination from the BOJ's perspective. It wasn't necessarily a signal that they were suddenly viewing the inflation profile as changed or appreciably more aggressive than they'd anticipated back in October. But I think they have started the ball rolling in terms of normalization. And I think it's quite interesting that when you look at one of the leading candidates for the governorship of the Bank of Japan, he put out a policy, Nakasawa, last year, or a policy pamphlet suggesting you row back from yield curve control first and then adjust negative interest rates. So in a sense, I think Kuroda is taking a little bit of a leaf out of that process. And we'd already seen the market trying to pressure the BOJ if we look back to where we were seeing sort of 10-year swap rates back in September, October. So the market was pressing. There was no little signal ahead of the event from the BOJ. And so that was the real policy surprise in those dull days just before the Christmas break.
Yes, and of course the Fed narrative had been in flux at that point as well, and maybe that's important. We've talked about the yen, or we've talked about the BOJ at least. Let's talk about the other side of that pair and talk about your expectations around the dollar. Those expectations, I mean, we've seen a big drop in the dollar already from October, November, or certainly the fall, the autumn of last year, into this year, some weakness in the dollar. Does that continue? Has that run too fast?
I think that possibly has as well. So we've really seen the market paring back both expectations for the immediate policy outlook from the Fed in terms of the next meeting. So we're now barely pricing just over 25 basis points. Now, I think there is still some degree of residual case that the Fed could surprise still a little bit on the top side there. But also, of course, the market is anticipating or pricing a very aggressive or a process of policy easing in the second half of this year. And that, to me, still feels a little bit too ambitious. So I think it is still very much the case that Powell is keen to not repeat the mistakes of the Volcker era, get rates up, and then keep them there for a period to make sure that inflation is kept out of the system. At the moment, the market is pricing in not only a much less aggressive reaction function in the nearer term, but obviously pricing in that easing profile in the second half of the year. And I think in both instances, there is a risk that the market has got a little bit ahead of itself.
And what do you make of the mismatch between the Fed and the markets in terms of expectations for cuts the second half of this year? I mean, does that end badly, Jeremy, or does that end sort of, peacefully?
Well, I think that's going to be the interesting question. I think, in a sense, though, we need to understand how we get there first and foremost, and so whether we actually do get that higher Fed peak that perhaps Powell would like to see in the market is perhaps struggling to realistically price. So I think that's where there's going to be an important narrative. I think as we go into the second half of the year, I think it's going to be more about what's going on externally outside of the US. I think that's going to be much more of the story rather than necessarily purely focusing on the Fed. Because, of course, as we get through the middle part of this year and we start to focus more on 2024, we start to look, hopefully, for a slightly more improved or an improving growth narrative. And I think that plays positively into the high beta or growth currencies.
Yes, I'm thinking about those. What do you make of, or heading in that direction at least, what do you make of the debate about whether recession is avoided or delayed in parts of Europe? Because we got at the back end of last week some better data out of Germany, better data out of the UK that sort of started those conversations once again.
Well, indeed. Well, and as you just highlighted at the beginning of the show, you're looking at those natural gas prices in the Eurozone. Now, that is the real narrative changer that we've seen from where we were late last year, where we were fearing there could be gas rationing, there could be elevated gas pressures. Those fears have dissipated, at least for this winter. We're not through the winter, but clearly, we've had a run of relatively benign weather thus far. So the gas story is not the risk factor. We've already seen, obviously, the Wilhelmshaven LNG capability opened up in Germany. So that's adding to the sort of flow of gas flow out and avoiding that sort of Russian dynamic. So I think from the Eurozone's perspective, when you overlay that with the Chinese reopening, which of course is good news for German manufactured exports, then the recession risks in the Eurozone, I think, have dissipated quite significantly. From the UK's perspective, though, I think there are still plenty of headwinds. So whilst we did have that slightly better GDP number for November last week, which of course was slightly a function of the unusual timing of the World Cup, does that necessarily take away the recessionary narrative? I don't think it does. I think it merely just forestalls the risk of recession, even if we don't meet the technical definition of a recession in Q3, Q4.
Okay, there's only so much that the football can do there,
Indeed,
Jeremy.
indeed.
Hard as it might try. Jeremy Stretch, thank you very much from CIBC. Thanks to Jeremy for coming to spend time with us on this special edition of Bloomberg Markets. Now, keeping you up to date with news from around the world, here with the First Word News update is Leanne Gerrans. Good morning, Leanne.
Good morning, Anna, and thank you. In Ukraine, the death toll from Russia's missile attack on an apartment building has now risen to 36. Ukrainian forces say the building was hit by a Russian missile designed for use against aircraft carriers. They say they have no air defense system capable of shooting down that type of missile. Now, the UK and the European Union are close to a deal on post-Brexit trading arrangements in Northern Ireland. They are nearing an agreement on customs that's designed to reduce frictions between Great Britain and Northern Ireland since the UK did leave the bloc. In China, the government announced that almost 60,000 people have died of COVID in the last month. That has led to calls for authorities to provide more data about the wave of infections that is sweeping the country. The virus has been spreading at a faster pace since Beijing did abandon its COVID-0 policy. More problems for President Joe Biden in the investigation of classified material. Additional documents have been found at his house in Delaware. Now, the Republican chair of the House Oversight Committee, James Comer, wants the White House to release visitor logs from the home. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Anna.
Leanne, thank you very much. Leanne Gerrans with you from First Word News Update. Coming up in programming this week, Bloomberg Editor-in-Chief John Micklethwaite sits down with the German Chancellor Olaf Scholz. That's taking place at 10:30 a.m. New York time. 3:30 London time. That is on Tuesday, in fact, I should say. So that conversation with the Chancellor of Germany, really interesting in the context of the news we've had this morning about changes in leadership in Germany. Some names at the top shifting, certainly on the defence brief. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You got to think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Tuesday, a Bloomberg exclusive live from Berlin, where German Chancellor Olaf Scholz sits down with Bloomberg Editor-in-Chief John Micklethwaite. A wide-ranging conversation only on Bloomberg, your global business authority.
This is Bloomberg Markets, a special edition of the program because it's Martin Luther King Day over in the United States, which means no trading stateside. I'm Anna Edwards here in London, and European equity markets are trading up by just 0.1% though this morning. Joining us now, Simon White, Bloomberg macro strategist, to take us through some of the market thinking this morning. Simon, very nice to speak to you. So a lot of talk, of course, around the Fed and whether we see a pause from the Fed soon on interest rates. Certainly a step down in interest rate hikes is the expectation now in markets from as soon as next month. You've written a piece over the last few days talking about how the inflation data comes in. We will keep repricing the Fed and its pivot. What are you getting at?
So basically, as inflation naturally comes down, so we had CPI number on last Thursday, and it came down again. Real rates naturally tighten as the inflation rate comes down. And what is happening is the market's pushing back against this. So if you essentially look at what the Fed expects real rates to do, and what the market expects real rates to do, the market is trying to bring rates back to non-restrictive territory much faster than the Fed. And essentially, the Fed wants higher for longer, and the market's saying, okay, we'll take the medicine, but with the spoonful of sugar of rate cuts sooner rather than later.
Yes, and so that's where we get this disconnect, where the market is expecting these rate cuts in the second half of the year, and the Fed keeps sort of trying to pour cold water on that, the market doesn't really listen. I mean, why is the market taking such a different view?
The view, I think, is in the fact that they just don't believe that the market can handle restrictive rates for that long. So the Fed, based on the dot plots, it's basically over 2 years if you look at when rates become non-restrictive again. The market's saying, we're giving you a year. So there's a real kind of disconnect between what the market and what the Fed believes the economy can handle. And what that also means as far as markets go is that that's where the risk lies. So if we suddenly get a rise in inflation, or not even a rise in inflation, but the pace of the fall decreases, that's where the risk lies. That's where you could see a bond sell-off. That's where you could see the curve starting to steepen, the yield curve, and that's where equities are very vulnerable as well.
Okay, so equity is vulnerable in that situation. What is your assessment of how long the Fed can pause for? Because if that's what we're talking about here, there doesn't seem to be much disagreement about the fact that the Fed is going to downshift and then probably pause. But I suppose it's the length of time that they stay static at that versus recent history, elevated level that's in question. What's your sort of assessment of that then?
So I think what people kind of don't take into account is that when recessions happen, they can happen very quickly. So, I think there's a sort of belief that like economies go in a very kind of smooth way. They go from a non-recessionary state to a recessionary state. It tends to happen quite abruptly. Two reasons. One, things change very fast. It's a regime shift. But second of all, the data that we're seeing today is often revised a lot lower. So when you're at major economic turning points, the data starts to get revised lower. So not only does the data right now starts to look worse, but all of a sudden you're looking at data 3 or 4 months ago is considerably worse. The biggest kind of revisions are seen at these turning points.
Yeah, a lot of the banks on Friday, they were talking about a soft landing for the US economy. Is that still in keeping with what you're talking about?
I think it's very difficult to see how that happens because, a soft landing requires obviously, inflation to keep coming down and us to avoid a recession. But you're like, well, how do you get inflation to keep coming down while not restraining the economy? And at the same time, how do you get it with the equity market keep going up? Because if we kind of get that situation, which is essentially like, betting on a coin landing on its side, being able to navigate that sort of narrow path, the stock market will keep rallying.
Yeah.
Financial conditions are therefore loosening, in which case the Fed's not going to like that either. So I don't really see how we can navigate through that path.
Okay, sounds like a lot of cake and also eating of the cake. Simon, thank you very much. Bloomberg's Simon White with the latest on markets. We'll get a perspective from the fixed income sector shortly. Nicola Mai joins us, portfolio manager and sovereign credit analyst at PIMCO. A lot of people talking about opportunities with slowing economies then in this year in fixed income. Where does Nicola see those opportunities? This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Seeds, typically between the time you start and they get out in the farmer's fields, is about 8 years. Now we have a pipeline of innovations. We've been funding the CG system for 20 years now. It's funded at about $1 billion a year. If people care at all about adaptation, that thing will be funded at $2 billion a year. I mean, there won't be anything close to the impact of climate-related seeds, climate-related maize, rice, wheat, sorghum, millet. And thank goodness, because of human genetics, we know how to do the editing. Thank goodness, because of AI, we know how to find the alleles. Because of drones, we can measure stuff in the field. So there's huge advance in terms of how the whole seed ecosystem moves at full speed.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Welcome back. This is Bloomberg Markets. I'm Anna Edwards. European equity markets up and trading despite US markets, of course, closed for Martin Luther King Day. The Stoxx 600 up 1/8% or so. Gas prices once again falling. A big story through the winter, of course, here in Europe. Let's talk about what's in store for 2023 in fixed income. Nicola Mai joins us, portfolio manager and sovereign credit analyst at PIMCO. Nicola, very nice to have you with us. A lot of people talking to us about the opportunities in fixed income in 2023 on the assumption of global recession, of maybe regional recession, or at least global slowdowns. Where are you looking in particular to see those opportunities?
Yeah, I think bonds, fixed income is very attractive at this point. It hasn't been this attractive for maybe 15, 20 years on, as you say, higher yields, so much better returns. And secondly, we have a recession coming, and we think the recession will be shallow, but it could be deeper. So you also have downside protection with bonds. So what we've been talking about is this idea of concentric circles of risk. You know, the lowest risk asset you can have is basically short-term government bonds. And the further you go out, you have longer government bonds. Then you take some credit risk. You have investment grade, high yield. Eventually, you get to equities and real estate. And I think these days, staying close to the center makes sense for a couple of reasons. First, as I said, there's still economic uncertainty. And secondly, at the center of these circles of risk, you have much more juice than you used to have before. Equities in the past were supported by this concept called TINA. There is no alternative. But these days, you have very attractive alternatives in relatively low risk assets with good returns.
And Nicola, where does that leave you with European sovereign? Where does that leave you with European sovereign debt markets? Because it seemed at the end of last week, we got quite a bit of data that suggested maybe the recessions wouldn't be as deep as anticipated in parts of Europe. Is that changing your thinking or pretty much in line with your view?
Yeah, I mean, I think the resilience in the data in Europe has been quite impressive. The PMI at 49 points to barely no contraction in activity. German IP looks to have been up in the fourth quarter. IP has been supported by a big backlog of orders. So it's not inconceivable that we will get away without a recession, or certainly with a very mild recession. And with core inflation on the more sticky side, that will put some pressure on the ECB. Now, the market is pricing an ECB peak rate of, say, 3.5%, which is restrictive in our mind. It's quite restrictive. So that should be enough to cool inflation. But it's not inconceivable that the ECB will have to go beyond that. And I would say, in general, U.S. duration looks more attractive than European duration here, partly because the inflation cycle is more advanced in the U.S.
Yes, the inflation cycle more advanced. Also, a lot more talk about rate cuts up until today, in fact, although I saw a piece this morning talking about the ECB cutting rates in the second half of next year. Who cuts first then, Nicola, do you think, the Fed or the ECB?
I think the Fed will cut first. So first of all, as I mentioned, I think if you look at the inflation data, in the U.S. inflation data, you see quite a turn in core goods prices, which is quite substantial. And you are seeing some moderation in wage growth as well. So I would say on the inflation cycle, it's more clear we're beyond the turn. I think in Europe, you've been lagging for different reasons. I mean, first of all, the currency weakening has been supporting the pricing. I think the very high increases in raw materials prices are feeding into the core numbers. Eventually, this will fade, but it's a little bit behind.
Okay.
So I think there is also simply a lag, and that's why the Fed will probably be the first one to talk about cuts.
Nicola, thank you so much for your time. Nicola Mai joining us there from PIMCO. Coming up on the programme, Philip Hildebrand, Vice Chair at BlackRock. He's been speaking to Bloomberg. We will get his thoughts on 2023 and beyond. That conversation shortly. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Digital Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to a special edition of Bloomberg Markets. I'm Anna Edwards, live in London. It's Martin Luther King Day, so no trading stateside expected today. But we do have European equity markets, of course, 2.5 hours into their trading session. And European stocks up by 0.2%. The FTSE 100 up by 0.1% or so. The DAX doing pretty well, up by 0.2, and the CAC underperforms a little bit. A lot of focus on gas prices. All the way through the summer, we were up in the 300 per megawatt hour mark. Now we're down at 56 as the weather has turned out to be not as cold as had been feared, and some of the coping mechanisms adopted by Europe seem to have done better than anticipated, so demand destruction accordingly. Natural gas prices on the back foot, down by another 12.4% in this morning's session. Talk of Chinese intervention in iron ore prices weighing on that, down by 2.8% on that particular measure, and oil prices also reflecting a little bit of weakness. We seem undecided today on whether we are risk on or risk off broadly across a number of assets. The dollar is fairly flat now, and stocks, as I say, gain just a fraction of a percent. Let's get to one of the big stories of the day, and that is around ongoing Brexit conversations. This, of course, to do with the Northern Ireland Protocol, which remains largely unresolved a number of years since we, of course, had the Brexit vote and then the subsequent negotiations. Bloomberg's Lizzie Burden joins me here in London. Maria Tadeo is in Brussels, and we understand that a meeting is to take place today that could move us closer to some sort of resolution. Let's get to Lizzie Burden first. Lizzie, good morning once again. So what is going to be discussed? This is all about the Northern Ireland Protocol and how it operates, what the relationship is between the UK, between GB, Northern Ireland and the Republic.
Exactly, and this video call is set to take place any moment now. The late morning is when we are expecting it. And really the idea is to take stock, to find out whether there's enough common ground between the two sides to enter a tunnel again of secret intensive talks. Because last week, of course, there was this technical breakthrough whereby both sides agreed to use this real-time database to track the flow of goods, as you say, across the Irish Sea. And that could lead to a broader customs deal, but you've still got plenty of sticking points that need to resolve on the European Court of Justice, on safety checks on agri-food products, on VAT. And so there's a lot of room to go. And even if London can get Brussels on side, even if the opposition Labour leader, Keir Starmer, has said that he's going to help steer a deal through Parliament, Rishi Sunak would still need to get the Eurosceptics in his own party on side and the Unionists in Northern Ireland, and they could prove the most tricky.
So from what you've said, given all the sticking points that will still exist even if they get some sort of deal on trade, that sort of downplays the significance of what we might get today. But I suppose suppose it is significant given where we've come from and given the bad mood that has existed across the channel up to now.
Exactly. The relationship's really been icy, not just since the Brexit divorce, but before that to the referendum and beyond. And specifically for Northern Ireland, there needs to be an end to this political stalemate. I have to say, though, for the markets, it's not really rocking them yet, perhaps because they've seen this movie before.
Yeah.
But if we do get a concrete deal, perhaps that'll excite the pound.
Maria, we're back to tunnels and landing ground, trying to navigate both of those. Take us through the Brussels perspective here.
Yes, Anna, you and I, we've done this many years now, and I would go a step further. In fact, I would point to the Irish press, which has taken this a step further this morning, suggesting that we could get a joint statement, not a deal perhaps, but a joint statement that will set out a framework with possible solutions that ultimately leads to this deal. Now, in many ways, of course, the big question is, well, what are the sticking points? They're very well documented. We've talked about this for a year. Lizzie just went through all of them. For the European Union, the two conditions are very clear. The Republic of Ireland has to be agreed or has to be in agreement with it. And of course, the integrity of the single market, the crown jewel, the moneymaker for the EU has to be protected. But beyond that, I think it's also worth stressing that across the channel on this side of the world, for the European Union, it has been very well digested now that the UK has left the EU. There is a sense that, yes, they have left, but if we can have a working relationship, well, that is a good thing. And in fact, if you look at countries like France, where Emmanuel Macron always played the role of the bad cop, well, he is going to have a bilateral meeting with the UK Prime Minister next month in Paris. So again, there's symbolic nature to this, probably more on the practicalities with the UK. But when it comes to the EU, this is about ticking this final box and then moving to the big issues, which is, you know, it's the war in Ukraine, it's the economy made in Europe, and of course, Biden's Inflation Reduction Act.
Okay, yeah, the latter one of those I know will be topical at the Eurogroup meeting that you are there for as well today, Maria, causing a lot of tension across the Atlantic. Thanks to Maria Tadeo in Brussels. Thanks also to Lizzie Burden here in London, keeping across the Brexit story and beyond. And stay tuned to Bloomberg Television. During this programme, Maria will be bringing us an interview with Pascal Donohoe, Eurogroup President, at 11:15 a.m. London time. That is coming up in just less than an hour. Now, keeping you up to date with news from around the world, here's a First Word News update. Leanne Gerrans joins us with that. Leanne.
Hi, Anna. In the UK, teachers may join hundreds of thousands of employees who have gone on strike for higher pay. The National Education Union will announce the results of a strike vote later today. Meanwhile, the House of Commons will debate anti-strike legislation. Now in Germany, Defence Minister Christine Lambrecht has stepped down after a series of mishaps and days of speculation about her future. It is a blow to Chancellor Olaf Scholz's government. Lambrecht's departure comes as Berlin is debating whether to supply Ukraine with tanks to fight Russia. Now, a deadly plane crash in Nepal over the weekend has again put the spotlight on the country's bad safety record. At least 68 people were killed when a Yeti Airlines turboprop crashed while coming into land in the city of Pokhara. Nepal has had nearly a dozen fatal plane crashes over the past 11 years. And in China, the government announced that almost 60,000 people have died of COVID in the last month. That's led to calls for authorities to provide more data about the wave of infections that is sweeping the country. The virus has been spreading at a faster pace since Beijing abandoned its COVID-0 policy. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Anna.
Thanks very much to Leanne Gerrans for that update on the First Word News. Coming up, we'll bring you one of our great interviews of this morning, coming from Davos. Philip Hildebrand, BlackRock's vice chair, speaking to the Davos team, talking about his expectations for central banks this year and that mismatch between market and central bank expectations. We'll bring you some of that conversation shortly. This is Bloomberg.
top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China, nothing comparable to that ever. That's why the heat records are broken every year, and we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
This is Bloomberg Markets. Welcome to a special edition of the program. It is Martin Luther King Day, so no trading in the United States. I'm Anna Edwards here in London. Now, Bloomberg TV is live at the World Economic Forum this week in Davos in Switzerland. Bloomberg's Francine Lacroix spoke with Philip Hildebrand, BlackRock's vice chairman, and asked for his take on the inflation outlook.
Oh, very much so. I think inflation is going to drop very, very quickly. In fact, I believe many of us will be surprised how quickly it will fall. The problem is it will fall very quickly. Sort of 9 to 4 will be the easy part, and then it's going to get very difficult to get inflation back to price stability. So, but at the moment, I think the initial phase will be a very rapid decline in inflation.
So what does it mean for central banks, Philip? And you lay this out beautifully, actually, in your World Outlook. If you're a central bank, if you're like the ECB, or even if you're the Fed, do you have to be much more careful in how you manage this from now until the summer?
I think the central banks are going to continue on their tightening path. They're going to be very careful, very focused on not losing the long-term inflation expectation anchor. And so I think we're going to see, you know, I don't see any chances, frankly, of easing this year. I think the market has that wrong. So they're going to make sure that we can really not just get from 9 to 4, but also limit any kind of risks that inflation expectations become unanchored. And because all of this is driven by labor market constraints, principally, it's still a supply side story. It's going to be very difficult to get inflation kind of below 4%, let alone below 3%. So we're in the easy phase, in a sense, now of this tightening cycle.
But is there a problem with that markets don't understand that? So we have, for example, Fed officials saying, look, don't expect a Fed pivot anytime soon, but the markets keep on testing it.
That's right, and you know, I think this notion that there could be easing this year seems to be, to me, to be far too optimistic. Because if you're the central bank, you're going to want to make sure that you can get this done, that you don't risk resurging suddenly of inflation expectations further down the road. So I think we're going to see at best some sort of pause, but not quite yet. And the market may need some readjusting relative to these expectations that we could be seeing some easing. And this is what we call it's a new regime. The great moderation is over. You know, this notion that when the economy struggles, central banks will ease, that was true in the past. I don't think it's going to be true this time.
And yet it's quite incredible to see actually the leverage being taken, or for companies that are leveraged, and interest rates going from 0 or 1% to where we are now without more bankruptcies. Are you expecting zombie companies to crop up?
I think it all depends how much damage will have to be inflicted on the real economy to get this last phase of the inflation being squeezed out from, let's say, 4 back to 2%. And you know, that will be the big trade-off. So this will not come without cost. I do suspect at some point the central banks will kind of back off. And not drive inflation all the way back to 2%. That might be a moment when the market can recalibrate. But for now, I see the tightening process continuing to ensure that we don't just go from 9 to 4, but can actually continue to bring inflation back under control.
So when's crunch time? I mean, if we try to put inflation 4 to 2%, does that coincide with the beginning of the summer months, or could it be later into the year?
I think we're going to see very quickly kind of dropping to 4. That's going to be, in a sense, the easy part. And then the question will become second half of the year, mid-year, what do the central banks do at that point? Do they continue and tighten far beyond what is currently expected in order to drive inflation back to 2%? I think that would entail pretty significant recessionary tendencies in the real economy, a lot of damage to the real economy. Or do they at that point say, okay, we've done enough, so let's see what happens if we let inflation persist for a bit above the 2% target?
So what does this mean for markets overall?
Well, yeah,
volatility or pain?
So there will be opportunities, not least in credit, in short-term bonds. We now have a very different outlook again when you look at where interest rates are. So for long-term investors, many opportunities, I think, in that space. For equities, I suspect until we know what the central banks are going to do with that residual piece of the inflation adjustment from, let's say, 4 to back to 2%, there are going to be some challenges around equity markets. So some of the enthusiasm right now with this notion that the central banks could ease again imminently, I suspect that's premature. So I still see some volatility here going forward until we know how the central banks are going to handle this difficult trade-off that they face.
That was the BlackRock Vice Chairman, Philip Hildebrand, speaking with Francine Lacroix in Davos, Switzerland, at the World Economic Forum meeting. I was led to believe we weren't going to see much snow this year. Looked pretty snowy to me. Anyway, year-end earnings from some of the biggest US banks have been reported, of course, at the end of last week. We'll get more of that this week. They met with a less than enthusiastic reception on Wall Street on Friday, at least initially, although by the end of the day, some of those bank names managed to rally. Bloomberg's Charlie Wells joins us with a breakdown of what we've learned and what's still to be learned about the banking sector. Charlie, good morning. So what have been the messages that you've taken away from the Q4 earnings season so far? Because it did seem as if the market took some time to make up its mind.
It really did, sort of down and then up slightly. And so that really indicated that there sort of are two stories here. There's one story that we knew pretty well and one story that we were sort of waiting to get more information on. The story that we knew well was that these Wall Street-facing divisions, so investment banking, M&A, those really are hurting and those were down. So when you look at revenue from investment banking at JP Morgan, when you look at it at Citigroup, that was down 60% in the fourth quarter, and that is really a wipeout. The story that we were waiting to hear more about was the story of the American consumer, of Main Street. It looks like the American consumer is faring fairly well. CEOs talked about that. When you look at credit card balances at, say, JP Morgan, those were actually back at pre-pandemic levels. So it looks like consumers are taking on debt. In one sense, that could be told as they are concerned, that they are under pressure, but it also could be taken as confidence, right? They're willing to spend on things that they want. They're willing to use that credit card, and they can pay it back.
Yeah, really interesting what that debt figure tells us. So there's the Wall Street story, there's the Main Street story. What is the messaging that CEOs are attaching to these then?
So these CEOs on Friday, if you listen to those earnings calls, they were sort of trying to do yoga on Tetris blocks.
Okay.
They had to talk.
Sounds dangerous.
It was dangerous. They sort of had to talk about why investment banking wasn't performing well. They also had to talk about why the American consumer was taking on more in debt, but still able to repay that. So we heard from Brian Moynihan at Bank of America saying that consumers had, quote unquote, a cushion left. But what one C-suite executive at Citigroup, Mark Mason, made this really interesting point about the potential for a soft landing. So of course, in these earnings calls, the elephant in the room really was a potential recession. But what Mason really made the point was that this could happen. This is a potential that we could have this soft landing. So glimmers of optimism from some of these.
Yeah, really interesting, because a lot of market voices say that the landing ground for a soft landing keeps getting smaller and smaller, and they just can't see it happening. And then you get these CEOs who have great visibility telling us that they still see it being possible. Now, we've heard from a number of big banks, a lot of them on Friday, all at the same time, or almost. And then we get another two this week, don't we? What are we still left to hear?
Right, so we're left to hear from Goldman and we're left to hear from Morgan Stanley. And when you think of those names, you think of investment banking. And so the story is going to be a little bit different. It's really going to be on that Wall Street story. So look, recently we heard about Goldman's layoffs, 3,200 staffers beginning last week. That really seems to indicate that investment banking at, the pinnacle of investment banking in a lot of eyes is potentially under pressure. So there'll be a lot of focus on that. Looking at Morgan Stanley, again, a lot of investment focus, but in an interesting note from Jefferies, an analyst pointed out that their wealth management unit could be sort of a bright point. So we'll still hear more nuance going forward, but there's going to be sort of less emphasis on the consumer. We've really picked a lot of that up already.
Yeah, so more yoga on Tetris blocks, or that was the story of last week?
I feel like that was the story of last week. It'll probably be more damage control on Tuesday.
Okay, thank you very much. I don't recommend yoga on Tetris blocks. It sounds risky. Right, Charlie, thank you very much. Bloomberg's Charlie Wells with the latest on the banking sector. Coming up tomorrow in programming, Bloomberg editor-in-chief John Micklethwaite will be sitting down with the German Chancellor Olaf Scholz. This really interesting in the context of the German Defense Minister Christine Lambrecht stepping down following a series of missteps and days of speculation over her future. Also, the role that Germany plays in supplying Ukraine, very topical. That conversation will be wide-ranging, though, away from just those topics, certainly talking about the German economy as well. This is Bloomberg.
Stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
Welcome back to this special edition of Bloomberg Markets. Martin Luther King Day in the US, so no trading in the United States later on today. But we do have European markets trading, and we're up by 0.2% here in Europe on the Stoxx 600. The FTSE 100 up by 0.1%. The CAC 40 and the Xetra DAX both making modest gains as well. US futures, for what it's worth, pointing a little lower. NASDAQ futures down 0.5%, but we'll have to wait until Tuesday to see whether that comes to pass. Let us talk about what's been going on in China. A number of really interesting stories to pick up on. One of them is a around the death toll from COVID-19 following the very sudden emergence from COVID-0 that we've seen there, but also regulatory news flow driving markets in China. So we'll talk about that. Bloomberg's Tom Mackenzie joins us to talk about the China situation. Tom, good morning. Let's start with COVID then. And we've had some data about the death toll. The World Health Organization still calling on China to share more information.
Yeah, and indeed, to that point, the World Health Organization and governments around the world have been very critical up until this point of the ability, or at least the desire by China to share statistics and data on not just the spread infections, but also the death rate. They have now finally come out, as you said, with a number for the first 5 weeks of the spread of Omicron, of course, after that drastic U-turn on COVID-0. And the numbers are a little under 60,000 deaths. Now, that on its own, 60,000 deaths, is already the largest death count that we've seen, very sadly, for this first wave of Omicron, comparable to other countries. But epidemiologists, scientists out there are very skeptical that that is indeed the true number. They say this could very much be the tip of the iceberg. The reason for that is, if you compare it to other countries, the death rate, for example, with this 60,000 suggests that 1.7, so a little under 2 deaths per million. In countries like Australia, it came in at 4 deaths per million. Countries like South Korea, 7 deaths per million. So epidemiologists are saying there's a big gap between what China's seen, the numbers reported, and the experience of other countries. And they're suggesting that maybe they're not taking into account deaths in care homes, deaths at home as well. The University of California coming out saying they think that maybe as many as 900,000 people have already died. The University of Washington saying the total number by the end of this year could be anywhere between 1.2 million and 1.6 million. And certainly everyone has agreed that that death number is likely to increase from here, particularly as you head to Chinese New Year and taking into account that 2-week lag.
Yes, okay, so clearly the main story here is all about the humanitarian story and just being able to get a sense of how big it is and how devastating it is a major task. In terms of what this does to the economy, let's reflect back on the economy. We are going to get a load of data out from China tomorrow, and one of those data points will be GDP. The GDP forecast now for the final quarter likely slowing to 1.6%. The full year GDP number probably grew just 2.7%. I mean, it's a far cry from the 5.5% that China wants, and I guess that goes some way to explain why we saw such a pivot in policy.
And not just a pivot on COVID-0, but a pivot when it comes to the regulatory crackdown on technology and real estate as well. So multiple different pivots. As you say, the data coming through, officials have been looking at this in Beijing, and you can be certain that it is the weakness around the economy on multiple different sectors that has led to these drastic changes. Again, not just around COVID-0, but also technology and real estate. Talking of technology, one of the flag bearers, and it's easy to forget that Didi, which is a ride-hailing company, was a flag bearer within the Chinese tech space up until a couple of years ago. They very controversially, at least under the eyes of Chinese officials, listed in the US back in 2021. Chinese officials were not happy. They fined them. They were delisted, and their app was banned. You couldn't download the app.
And that seemed to start the sort of started the firing gun, didn't it, on the Chinese clampdown on big tech?
Yeah, and then you saw the clampdown on Alibaba, on Ant Financial, on Tencent. I mean, the list goes on. Now, and this is key, they've been approved, they've been allowed to get their app back into Google stores, Android stores, and on other platforms, so you can start downloading that. We don't have a date yet, but it's going to happen. And again, China watchers are saying this is a pivotal moment. It just underscores the fact that regulators are easing back on that tech crackdown. We've seen gaming approvals for companies like Tencent. Ant Financial was allowed to go ahead with a capital raise. Bloomberg Intelligence saying it's very unlikely that companies like Tencent and Alibaba are going to face anywhere near the headwinds they have in recent years. This year is a much better picture for those tech companies, and this is another example of that direction.
And as you say, it's tech, it's also real estate. We had some other news lines just in recent weeks, didn't we, around the property sector and going easier there. So that's also worth noting. Tom, thank you very much. Tom Mackenzie joining us there with the latest on what's happening in China. Coming up on the programme, we will get a market perspective. We'll talk to Colin Graham, Rebecca's head of multi-asset strategies. How is he looking ahead to 2023? We will talk about some of the big events that are on deck this week. The BOJ, of course. What is at stake if we saw some kind of messy exit from yield curve control? What are the other possibilities on his radar for 2023? We'll talk about some of those potential black swans. This is Bloomberg.
wrong, and smoothing out bumps in the road is what customers expect from energy providers. And for Duke's renewable assets, that process is overseen from one room in an office building in Charlotte, North Carolina. Brian Savoy showed me around the company's Renewable Control Center.
This is where our operators are monitoring and managing over 5,000 megawatts of renewables across the United States.
How would this differ from like a conventional asset monitoring center?
Yeah, so assets, historically, they would have the monitoring center on site. So you might have an operator with screens, but at the site. Whereas this, we could do 90 sites. There's offshore wind, onshore wind, solar, and they're looking for the smallest change in output because every megawatt hour is money. When one of these assets isn't producing full capacity, we're putting another resource on, and we're having to toggle this on a consistent basis. And this, as clouds come, this is by the minute. This is not, or the hour it's off. No, it's by the minute, and it'll fall, come back, and we have assets that follow this digitally as well, so that we can keep a consistent flow of electrons on the grid.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Count Under the Close.
Welcome to Bloomberg Crypto.
It's 11 a.m. in London, 6 a.m. in New York, and 7 p.m. in Hong Kong. I'm Anna Edwards. Welcome to Bloomberg Markets. Our top stories today. A new poll of economists says the ECB could cut rates as soon as July in an end to Europe's battle against inflation. And negotiators from the EU and UK look to end the disputes over Northern Ireland as post-Brexit talks ramp up today. Plus, the World Economic Forum is back in Davos for the winter after 2 years of pandemic disruption. Welcome to the program, everybody. Even though the United States is closed today, European equity markets are open, of course. We see modest gains for European stocks. Let's get an update on the market themes that we are faced with this week. Bloomberg's Valerie Teitel joins us with what we need to watch. Valerie, good morning. So what are likely to be the catalysts this week coming out of the US and elsewhere?
Look, Anna, there's 3 key catalysts coming out of the U.S. this week. The first is Morgan Stanley and Goldman earnings that are due tomorrow. And then a highlight in the data sphere is U.S. retail sales. This is the last key data print before the Fed meets in February. It's probably not consequential that the key Fed speakers we hear from later in this week are one of the most influential out there. You have the New York Fed President John Williams and also Vice Chair Lael Brainard. They're both due to speak on Thursday. There is going to be live Q&A at those events. The key thing to watch here is what is their assessment of the moderation in wage inflation we got from the payroll data, and what is their assessment in the moderation of core CPI we saw last week. It was Fed President John Williams himself who mentioned that is the core of the inflation onion. Now, if we look to how markets are acting today, there's a bit of reversal of the theme. S&P futures are 0.3% lower. This is after the S&P index closed above its 200-day moving average on Friday. German 10-year yield, I have this in here as a proxy for treasuries, showing quite a softening, or a bit of softening in the fixed income space. Yields are higher by 2.5 basis points. And lastly, the dollar index. It's trading roughly flat today, but this has been the key mover so far this year. I know you guys were talking about it with guests. It's weakened nearly 2.5% since that payroll data we got it earlier this month. And overall, Anna, you know, dollar strength was really the theme of 2022, and it's turning out that dollar weakness is the theme of this year. It's weakened over 10% now since its September peak.
Yes, and something we'll be watching closely when it comes to the performance of the dollar is a BOJ meeting that looms on the agenda for this week. The Bank of Japan meets early on Wednesday. How have markets been stepping up pressure then on the BOJ recently, Valerie?
Yes, it was happening mostly in the fixed income space overnight. The Japan 10-year yield is now trading above the Bank of Japan's target of 0.5% for now the second day in a row. We are seeing some softening in dollar yen. That's not really a surprise. surprise given what's happening in the broader dollar index, but I want to get more into what's going on in fixed income in my next chart here. Anna, the 10-year swaps are now trading at around 1%. That's 50 basis points above the Bank of Japan's bond yield target, and that's showing us a few things. The desperation for a hedge for what possibly could come on Wednesday, and possibly there could be a full termination of yield curve control. We know that the last meeting they widened out 25 basis points, and the swap market is pricing in nearly 50 basis points of a move. That's pretty substantial. But all of this is really showing, what is the risk and why maybe is the Bank of Japan so eager to pull back on their yield curve control? It's because their balance sheet is at risk. Last Friday, the BOJ's daily bond buying jumped to a record, Anna, and note they already own 50% of the JGB market. Just how much are they willing to put at risk defending these bond prices as they widen their yield curve control bands?
Okay, Valerie, thanks very much for the briefing. Valerie Teitel, and what's on the radar coming through from the United States and also coming from Japan. Colin Graham joins us, Head of Multi-Asset Strategies and Co-Head of Sustainable Multi-Asset Solutions at Rebecca. Colin, very nice to have you with us. I know you and the team have been giving some thought to 2023 and a bevy of black swans that could lie ahead. I'm not sure if dropping yield curve control would count as a black swan, given that some people are already talking about it. In fact, it's been a big talking point in markets of late. If we look at the BOJ and what is possible this week, are you factoring in a big surprise from the BOJ this week?
I think that they'll still remain, I think there'll be a calm around this. I don't think they'll abandon it wholesale, because they need to be measured in what they do and change the messaging gradually. Otherwise, you do get a disorderly disruption to the bond market, but also to the yen as well. And I think the yen strength is also telling you that as well. So I think that they'll try and calm markets first, but they'll continue on their path to move away from yield curve control. It could be a black swan if they do it disorderly.
Right, indeed. So we saw some tweaking of policy in December, and now you think maybe the focus should be on calming markets. But if we do see a sort of messy exit, whether it comes this week or whether it comes in the weeks ahead, months ahead, Colin, any kind of messy exit from yield curve control, what is at stake for global markets if that comes to pass?
Well, I think it reads across into other bond markets as well. And given what a knife edge bond markets are on at the moment, then it's very difficult to see which way that's going to fall. And so for us, we try and take a longer term view and say, let's think about where bond yields should be given where the economy is. And our view is that actually, the risks to the sort of longer end are to the upside, not just in Japan, but also in terms of the US as well.
Okay, and let's think about 2023 more broadly then, Colin, and what you're expecting to see from the Fed, for example. We've seen inflation, of course, moderating in the US, and that's got people excited over recent months about a downshift from the Federal Reserve. So if you're assuming, say, 25 basis points, correct me if that's not your view for February, then do you see a plateau? And then how long can we stay at those relative to recent history, relatively elevated levels of rates before cuts have to start?
Well, I think we're in a sort of period of Goldilocks revenge, where the inflation data is softening, but it's still reasonably high, and we have to remember that. So our view is that the Fed will stay higher for longer. So taking that view, you'd want to have a more contrarian view on the current market pricing for bond yields.
And so higher for longer, what does that look like, Colin? Does that mean you're in the camp that sort of backs the Fed, goes with the Fed view that we won't see rate cuts this year, or do you think we will see rate cuts from the Fed this year?
I think that the Fed will remain on hold until they're very clear that the inflation is coming down. What that might lead to is more pain in the real economy, and if the recession does hit this year rather than next year, then concerns about deflation will raise its head as we go into 2024 because the Fed has done too much. But I think the Fed needs to keep rates high in order to do that, because you haven't seen, if you look at the money multiplier, for example, the money still getting into the system has still been growing. It's only really in the last couple of months you've seen the money multiplier start to tail off. So and it's also higher than it was at the start of the year. So the Fed's raised, but the amount of money stimulating the economy is still quite strong.
Okay, so let's dive into some of the 10 potential black swans that you identify for 2023, Colin. And one of those is the possibility of a deflation disaster. Seems difficult to imagine a deflationary environment, a substantially deflationary one, I guess, right now, given what we've seen with inflation at very elevated levels. We've been above 10%, above 9% in many Western markets. How likely is it that we're dealing with deflation in the short to medium term?
I'm glad you point that out. These are sort of left field events that could get priced into markets and would have a big effect. So we're saying they're still low probability, but these are events that could derail your central case for 2023. But if I just rewind the clock 2 years, very few people could see inflation at 9%. So, that's just something we have to bear in mind. These things can move quickly, and once the trend starts, it can continue to move further than you think it will. So that's why we're not saying that in the next recession there might very well be a deflationary scare, as we have seen in previous recessions since the late 2000s.
In the era of low interest rates, we'd also become used to, Colin, talking about ESG as being a real investor priority, and it was a real focus for many in the markets. We're still focused on ESG in many ways, but a little older and wiser about the claims made by businesses and investment firms in that regard. Is that something that gets some further scrutiny this year?
I think so. I think that we've talked about greenwashing, green hushing, impact washing on there, but at Rebecca, we're very focused on collecting the data that makes the investment case behind these claims. And if we look at the valuations for some of these companies that are within the climate change spectrum, they're lower they are now, but you can see things have changed enormously since the start of last year, where actually the case for climate transition is much, much clearer now and much more necessary, especially in Europe.
Talking about big tech as one category, Colin, possibly seems a little naive these days. Focusing in on one part of that, and that is social media, there's been a lot written about the regulatory challenges that could be facing this sector. Is 2023 going to be the year where we see actually substantial change on that front?
Look, it might be, and trying to get inside the head of a government or policymakers is a difficult task, but I would take a step back and think about, well, actually, where is tech aligned with government spending? And that's where we would look to be investing. And you've seen the change in the 180-degree change in China in terms of allowing big tech companies to run businesses more so than they were a year ago or indeed 2 years ago after the clampdown. So, we would sort of say, okay, yes, there is the chance that some of the large tech companies come under scrutiny from the regulator, but we would be more focused on the tech companies that are actually investing aligned with what the regulator and governments want.
And Colin, what is the realm of possibility that you're contemplating when it comes to the situation in Ukraine? Obviously, this is a humanitarian story, but looking at this from an investment perspective.
Look, we can't diminish what is going on in Ukraine. And, one of the stances that the multi-asset team took at Rebecca last year was that we weren't going to invest in commodities because it felt speculation. So we used, being multi-asset, we were able to use other assets to hedge our portfolios. We could see, if things improve, we could see the peace dividend, and that will be particularly potent for Europe. However, I think that the consensus is that it will continue the way it is at the moment. And that's what's baked into most people's 2023 outlooks.
Okay, Colin, thanks very much. Thanks for joining us. Colin Graham of Rebecca giving us his view on 2023 and some of the things that could happen. Keeping you up to date now with news from around the world. Let's get a First Word News update. Leanne Gerrans joins us with a briefing. Leanne.
Hi, Anna. In Ukraine, the death toll from Russia's missile attack on an apartment building has now risen to 36. Ukrainian forces say the building was hit by a Russian missile designed for use against aircraft carriers. They say they have no air defense system capable of shooting down that type of missile. Now, the UK and the European Union are close to a deal on post-Brexit trading arrangements in Northern Ireland. They are nearing an agreement on customs that's designed to reduce frictions between Great Britain and Northern Ireland since the UK left the bloc. US Treasury Secretary Janet Yellen will hold her first face-to-face meeting with Chinese Vice Premier Liu He tomorrow. They will meet in Zurich. The surprise announcement follows the November meeting between President Joe Biden and President Xi Jinping that led to a modest thawing of relations between the two governments. More problems for President Joe Biden in the investigation of classified material. Additional documents have been found at his house in Delaware. Now, the Republican chair of the House Oversight Committee, James Comer, wants the White House to release visitor logs from the home. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Anna.
Leanne, thank you very much. Coming up, an interview with Pascal Donohoe, president of the Eurogroup. A lot to talk about at that Eurogroup meeting. The trading relationship in Northern Ireland is one of those. This is Bloomberg.